Welcome, everybody. Thank you. We're back here now with a day in Miami, and we are at the FAMP. So before we get into anything, I want Sammy to give us a little bit of a background. Sammy, where are we? What are we doing here today?
Right now, we're at the Florida Association of Mortgage Professionals, the Miami chapter. This is our annual winter conference where we invite down some of the best lenders in the space, non-QM, conventional. We talk about, just create a space where people can network, build reports with new vendors, new lenders, touch base with current lenders that they have, and really use it as an opportunity for networking, furthering the relationship beyond the screen and in person.
What year is this here already? This has been going on for how long already?
Probably a good 10 years.
10 years. You noticed I threw it to your beginnings because I don't know what FAMP stood for, right?
I was going to say, I was going to throw that over your way.
This is why I threw, okay, go ahead with FAMP, because I didn't want to go ahead and say something stupid that I didn't know what the hell I was going to talk about. So I want you to introduce our special guests so we can go ahead and get into a deep dive of what this conference does and what comes out of this conference.
So I could talk about what the conference does, and I'll let the guests introduce ourselves. We have some very special people today.
Okay, that's
These
important.
are some of our VIP sponsors. But
we love VIPs.
This is Miami and VIP go hand in hand.
Yes, sir.
But you want to start us off, Randy? Tell us a little bit about.
Yeah, for sure. Yeah, my name is Randy Reese. Is that two?
There you go. Perfect, Randy.
There we go. Yeah. So name is Randy Reese. I'm the Senior Vice President of Sales for NewFi Wholesale. I flew in this morning and looking forward to the show. But I've been in the subprime non-QM space since 1993.
Wow.
So I've been slinging around a little bit, been hanging out a little bit. So
a lot of people weren't born yet here, Sammy.
Well,
they weren't born yet.
Yeah. Can we keep that at this table?
Yeah. Cut that.
But 1993, yeah. So I got into it right out of college, and I'm mid-50s and still doing it and having a great time. Love it.
That's great. What about you, Manny?
Yeah, same here. I work for Lens Financial. I'm a regional sales manager there. We are actually located, our corporate office is here in Fort Lauderdale, Florida. So we're right down the block. We love the invite here to be able to sponsor a booth. FAMP has been doing it actually quite a long time, even in the 90s. But there's a lot of energy coming back. Last year it was a great show. Being a regional and a chapter for the whole state of Florida, they really put the mortgage business back on the map, and I think there's going to be a great turnout. We're looking forward to it.
That's for sure.
Yeah. So tell me a little bit about the fact about not only the networking that's here, right? But what's the biggest takeaway that a lot of people can do when they leave this conference? Any of you can go ahead and answer.
Yeah, I think when you come to this conference, you should have a plan. Or what are you trying to do for your business? Are you looking for a specialty type of lender? Are you looking for some types of engagement with someone that you want to build a relationship? I think we're in the relationship business. There's a lot of LOs that come here, and those are the ones that are walking around in the booth. And we as wholesalers, sometimes it's the first time that we get to see them.
Correct.
So it's important to make that connection, make that contact, and expand on that. I think when you leave here, sometimes you find new products, you build better relationships, and just the unknown. You find something that you didn't know before, and you leave with something that's promising.
Yeah.
Randy, you want?
I would add on that. So you're going to have a lot of options on product, but I also think that the golf event and the after events, you could shake hands and have a discussion with your fellow industry people,
right?
And just get their ideas of what they're doing and what makes them successful. So there's a lot of camaraderie here, and there's a lot you can pull from that.
Right.
I would even add another layer too on top of that. There's a lot of good education, a lot of good ways to learn about what's happening in the markets, some recent trends, and the kind of products that both Lens and NewFi are offering to their investors and to their clients to help them grow their business. So these brokers are out here, they might know one thing, not knowing how many other revenue streams and revenue sources are out there, which I think would be a great topic of discussion to get into.
Yeah. Well, before we do, I want to say something. Where are we with this year? What's good this year? What's happening this year that we can tell people that we're looking forward to? I mean, we hear all the stuff with the Fed and the rate cuts and this, that. Everybody was always waiting for, is it a good time to buy? Is it a good time to sell? I mean, I never know when the hell is a good time to buy or a good time to sell because you take this risk. What can we educate our listeners and our viewers out there from expertise from you guys on that?
What I could add to that is that in 2025,
Yes.
the non-QM space had a record year.
Okay.
And in 2026, we're looking. They're saying we're going to do about 125 billion.
Wow.
In non-QM loans in 2026.
Okay.
So there's kind of two ways to go to market with that. You could do a securitization, and then you could do some of the insurance companies and the equity groups that'll add into that. And both ends of that are very, very thirsty and very hungry to get in our side of the business. So we're expecting very good things in 2026 going forward.
Okay.
And maybe it's also important maybe to take a step back. Maybe, Manny, if you want to explain the difference between what's non-QM and QM for people that are wanting to grow their different avenues of business.
Sure. Well, we specialize solely on non-QM. That's all we do. We want to be a subject matter expert in that field. We're conveying a lot of the information to the LOs because I think there's a lot of business out there that is being missed. Non-QM basically, I think, is geared towards the self-employed individual.
Mm-hmm.
Okay.
And if you look at data,
it's a lot of Miami people.
Yeah. And after COVID, even a lot of people got into some type of business.
Yes,
on the
of
side.
course. Yeah.
So there's a lot of Schedule C type employees. That falls.
Non-W-2. This is like not the easy to qualify. More.
Correct.
Yes.
I mean, we could do that, right, in certain circumstances, and it could be a collateral issue, but we are geared towards, I think, self-employed people that have either bank statements for income, have a P&L.
Very important to listen to this.
Yeah.
This is very important. That's very important. Continue.
Yeah, and at the end of the day, there's so much business out there that even, and we could get into sources and referral sources and how to engage them, but this business is here to stay. I think the mortgage industry, I think it's never been better than it is today for both the consumer and the flexibility of true products. And back in the days, they talked about subprime and they talked about the problems with it. Non-QM is a totally different product. Subprime was basically no credit, no pull. If you had a pulse, you had a loan, right? Today, we are the main factor in the non-QM world is the ability to be able to repay, and that is done through income verification.
So it's basic. So what are some ways that non-W-2 employees can be verifying their income? Maybe if you want to touch on that a little bit.
Yeah, sure. So you could do a couple different ways. For a self-employed borrower who is writing off on their taxes, they could do a 12 or a 24 months bank statement loan. If I could back up just a little bit on the QM and the non-QM piece. Basically, a non-QM loan is something that the government's not involved in. It's not government backed, so they're not purchasing that paper like a conforming loan.
Does that cap the amount of leverage that they could go up to? Is it like capped at 80%, or does non-QM go a little bit higher?
No, it goes higher.
Wow.
Yeah, for sure. So the loan amounts are going to be a little bit laxed than a conforming loan.
Okay.
So, so it's basically for somebody mortgage 101. It's everything that the government's back is not QM. So now dial into the self-employed borrower. So we are going to. Yes, sir. So options are self-employed borrower. We could do a 12 or 24 months bank statement on that. We could do, as long as they're same line of industry, if they're a W-2 employee, we could do a 1099 on that. And then on the investment piece, we use it's called a DSCR loan. And then basically we use the input of rents to offset the mortgage.
So looking at the debt service coverage ratio, making sure that, hey, these rents are enough to cover all the carrying costs of owning this house. But I think going back to, I think it'd be interesting to learn a little bit more about the bank statements, and because like you mentioned earlier, Manny, Miami's got a lot of interest. Like you could look at a bank statement, you have cash, you might not have enough deposits that are consistent, but using a bank statement could help qualify someone's income to make it qualify for a loan.
Well, not only that, but I want to touch on something that you guys said very important. A lot of people have this misconception of mortgage brokers. You know what I'm saying? I'm not one of them because I feel that everybody needs a mortgage broker. You need a mortgage broker. I mean, you need somebody to guide you through all these things. I'm one of those people that I'm saying, just tell me what I need to do. What paper do I need to give you? What do I have to give? You know, people need to understand the mortgage brokers are really, you know, the most important factor in order between you and getting that purchase. I mean, and with all due respect to, you know, banks and everything out there that people will say, oh, you can just, you know, come to a bank. I don't see anybody just walking off the street and walking inside a bank and saying, I need a loan. I mean, I feel it's a little bit more complicated than sitting down with a mortgage broker and a mortgage broker saying, you know, I work with 5 and 7 different, you know, I've purchased properties before. And every time I purchase a property, I have my go-to mortgage broker as well, and he'll tell me, Manny, look, you have with these people this, with these people that, you know, depending what is right for your pocket. And I think it's so important for the audience to understand that we are in a moment right now that you really have to give faith in all those people, like those mortgage brokers and everything, to guide you. Because there's a lot of misconceptions out there, and there's a lot of people who steer you wrong. And I think it's important for people to understand that mortgage brokers are important, and that it makes life easier, I believe, in that sense.
Well, if you put yourself if you go to the local bank, right, it's gonna put you in a box, right? So the local mortgage broker is gonna have access to conforming loans. They're gonna have access to, you know, hard money loans. They're going to have access to DSCR. You know, they're going to have a broad array. So if something happens where they don't qualify on the income piece, instead of going to a different resource,
right,
they could roll that right over to another lender. So that's I mean, it's a great point that you make, Manny. And yeah, it just gives them some diversity where they're going with the paper. Yeah.
If I could add to that, it's also availability and service. I think the mortgage broker is. They partner with realtors that work on weekends. They partner with different contractors, and you can't really have that relationship with a banker because they're closed, they're working banking hours, and in today's world, a lot of banks don't even have personnel in the bank. Right?
That's what I was just going to tell you that right now. I mean, you can't even, how many times has anybody really walked into a bank right now and just say, oh, I don't even know if there's tellers anymore. I mean, I'll probably get a whole bunch of flack for this on banks. Oh, we have tellers. But still, I mean, I haven't gone there in my life to cash a check or anything. I just, they take a picture or whatever. So then in that point, I think life just makes it so much easier. And I think that for, you know, Miami, especially this market, you know, the one thing that I always say in our podcast, we're Miami, USA. I don't believe we're I think we're our own country because, you know, we just believe in Miami, USA. So here, everybody comes here to make it better, make it bigger. And I think it's so important to know that there, you know, companies like you guys companies exist in the sense because there's a lot of entrepreneurship. And then we interview so many up and coming entrepreneurs, which I think that's one of the reasons why we did this podcast, because we wanted to really shed spotlight on all those people that have dreams and that wanted to, you know, here you guys are helping those guys and those women making those dreams come true. Could it be a cookie company? Could it be, you know, whatever company they're doing? I mean, I think that's, you know, something that's so important. And I really think that you guys should elaborate not only on that, but the importance of the sense of what you guys can do for them in the sense of, listen, we can get you a better rate. We can help you, you know, how much you're going to come in down with. You know, all those little knickknacks that are so troublesome for other people, I think it just makes life easier for everyone in that sense.
Yeah, let me dissect that a little bit. Well,
please do.
Yeah, we're in the wholesale industry, so we are wholesale lenders.
Correct.
The folks that you're speaking about, the retail loan officer, they're the ones walking around
Correct.
and trying to gain products.
But they have the relationship with you guys.
They do have the relationship with us.
That's the important part.
That is exactly right. So what we try to do is, what we don't forget at Lens is that at the end of the day, we're all in this together. We're a conduit to the end result. So we try to preach to the LO and our internal staff, everyone together, that at the end of this, there's a family. We're putting people in homes, and although we're disconnected a little bit because we're not on the front end, the LOs is
Correct.
The relationship and the client. We try to make sure that we are very involved with that. We're changing lives. We're expanding products.
Yep.
So education is a big piece. Every LO that we structure loans for, and there's a loan for everyone, I always say it's not what the consumer wants, it's what he qualifies for.
I like that.
Okay? So That's something that every loan, I tell the loan officers, let's see why it worked, why we needed to adapt, why we needed to make changes, and let's learn from that. This is a career. This isn't just for going out there and doing loans without learning and expanding your growth.
So let me ask you this. What are some things that we could share with some of these loan originators, these loan officers, to help them grow their business, not only their business, but enable these families to move into these houses and then grow their family
I could
dream?
feel that, yeah. So let me tell you a little bit about the non-QM space. So separate from the subprime years ago, our average FICO score is a 780.
Wow.
And our average LTV, I think, is an 82% LTV.
That's not bad.
No, that's,
It's not.
that's great.
Right.
That's
Yeah.
top. That's top percentile.
So we
I don't know where the hell I'm at. I got to check mine. But anyway.
So we approve at NewFi. We approve about 80% of the loans. We approve about 80% of the loans in the pull through, and we close from start to finish in about 24 days. So if you think, so there you go. So I mean, if you think about what 10 years ago, we couldn't go as a wholesaler. We couldn't walk into an office without having a very in-depth conversation on why they should use a wholesale non-QM lender.
Right.
And now we're the shiny object because we're putting underserved people who can't get a loan at the local bank, we're putting them in houses. And again, we're doing that with, the scary thing about, the things that could really ruin a loan are credit, collateral, income, right? We're doing the income piece up front, and then we know the credit up front. So there's really, to scare anybody, this is really once you're into this loan, it's a very easy loan. Again, 80% pull through in 24 days. So it's a product that is up and coming, and it's continuing.
I think that 80% is. At the end of the day, execution certainty is one of the most important things. You don't want to be spinning your wheels and going through all these hoops and a deal fall apart in the fourth quarter because something was missed. And I think maybe another interesting thing, what are some advice and tips that we could give some of these loan originators to keep that 80% pull through, to keep moving the ball forward in the earlier stages of the process so that success is on the other side?
I will say this. I was having a conversation a couple of days ago with one of a very successful mortgage broker that has been very successful for a long time, and he was telling me that he's slow. I don't see the slow environment, so I started asking him, why does he think he's slow? And he just comes up with the same old common answer, just the business isn't there. But I think he's a victim of his own success. So what happens is when you're in the business for the very first time, you're grinding, you're doing the work that is not the most comfortable, it's not the most rewarding work. But it turns into success, you start making a lot of money, and you tend to, once you have success, you tend to abandon that. And you forget the grit, you forget the hunt.
Yeah.
And I think that's very important because we have young people that he's telling me that he's slow, but I see the young up-and-coming people that are not slow.
They're adapting.
They're adapting, and what's...
There's hungry sharks out there, my brother.
Well,
Trust me.
Yeah, and
Yeah.
what's missing for the successful guy is that they don't have that energy.
No, but I get you. You're right.
So,
You're right.
so they have to either go back in and relook at their plan and their process, or they have to hire some of these young guys so they can bring that energy back. There's a lot of energy. You're going to see a lot of energy today in the show. This business is, for those that have been in this business and those that haven't or transitioned into it, there's nothing like the energy of the mortgage company, especially once you close that deal.
Right. And that person, whoever it is, I guess I have to differ a little bit too, because at the end of the day, people are graduating. People are every day, every year somebody's graduating from college, has a boyfriend, girlfriend, or whatever. They want to get married. Everybody's looking for a home. There's never, like I told you in the beginning, when is it the right time to buy your house? I said, everybody thinking, oh, should I rent first? Should I buy first? I come from the Cuban mentality of, the old family, you have to own. You can't rent because you're throwing away your money. So at the end of the day, I don't understand his philosophy in the sense that I don't see it moving. My nephew just bought a home this year. Last year, the end of last year, and he was always renting because he was always waiting for that right moment. And one day I just told him, you throw away that money every month, and you have nothing there.
Yeah, so we've done some research on that. We've took a 10-year window to see what the unemployment rate is and what the GDP is, and over the last 10 years, it's been pretty flat. So my advice to any LO out there when they're having a conversation with their borrower, it's now is the time to buy.
Yeah.
You're wasting, you're wasting dollars if you're renting at this point.
Yeah.
Yeah.
Manny?
Yeah, same. I think hindsight is 2020 when it comes to the buying scenario. When I first bought my home, there was a time where homes were expensive at that time, relatively speaking, right? And today I look back and I was like, the best thing I ever did.
Right.
So, and I think people our age could
Of
relate
course,
to that, right?
of course.
You look for that perfect time and it's almost never there. What I can tell you is that now there's so many products with the non-QM, there's so much flexibility that you can't buy your home. It's just you got to have the right fit for it. I don't know about that timing. I don't know if we can all really determine.
You're
when
right.
is the best time.
Nobody has a crystal ball.
Yeah.
But Manny, I would say that my advice to any loan officer here is to reach out to your local account executive. They're very hands-on. The new FI model is to have a local AE.
Okay.
And they will come in and they will go over a marketing plan with them. We have resources for flyers and videos where they could really, if they want to jump into the non-QM space, they can do that. And our AEs will help them do that. They'll do sales calls with the loan officer, with realtors, and we'll help them, go from sometimes a scary process to being very, very fluent in the non-QM space.
I like that.
And I think that speaks a little bit to what you were talking about earlier with your friend that was in it, understood his product, and then the market shifted, and they got left behind a little bit. So adapting, learning it. The first one's always going to be the tough one, but having good account executives, someone to help you through the first 2, 3, 4, then
Yep.
you're off to the races.
Absolutely.
Then the world's your oyster.
Yep.
There's so much money behind these products and so much resources to help you scale your business that if you're not leaning into it and tapping into the resources that are right there in front of you, that's almost on you.
I mean, knowledge is power, especially in this environment. The cheese is moving, right? So we have to be
Follow the
we
cheese,
have to
yep.
we have to be ahead of the cheese.
Yeah. And you have to be creative. When we're talking to our LOs, we're also giving them ideas on how to build their business, right? I think that's important. It's not just asking for their business, but how can we build them and monetize their business?
Of course, yeah.
So I'll give you a perfect example. There's so many outlets. There's so many outlets out there where you can get referral business. Everybody goes to the natural realtor market, right? But how about like today's world, you have a pool contractor and he's out there trying to build pools for people. A pool today could cost $100,000, right?
Yes.
No.
So if they don't have financing for that, imagine an LO that's starting this business and going to that pool dealer and saying, listen, when you can't obtain financing, we have a product that we can do that through the equity of a home.
That's brilliant.
Now there's two things that you've done. You've secured that pool dealer's job and you've gained a client. Think about that referral source now, that pool dealer. You're not asking him and telling him, hey, I have a product, please send me the business. You're telling him, I'm going to build your business.
Yeah.
Think about that partnership going forward. Secondly, what people miss is that pool dealer would be a client of yours.
Yeah.
Because they're self-employed. In the non-QM space, he's going to be a client of yours. Now you won, right? So those are creative things that we try to talk to the young LOs and saying, hey, there's always a way to get the business. Just be creative about it. If you're just out there sending out flyer and making emails and whatever it may be, you have to show that there's value to the person you're trying to get the referral. I have done this for a long time, and it's always worked in the 90s and the 2000s. It's show value, and the referral partner would be stickier. And I think that's what we try to adapt and show the younger folks.
I want to ask a question that I know that our viewers are going to ask. Where or have you seen AI incorporated with what you guys are doing?
So, and on the bank statement piece for sure. So
Okay.
you're going to be able to, in the near future, send your 12 months or 24 months bank statements and have them calculated immediately, and as the income source. So I think that piece is good. We do something an instant LE, so on the LE piece of it, and then we have it's called IQ, income IQ. So those things are going to calculate your income faster, and it's going to take you from start to finish, and again, it'll make you. It'll cut your margins down on your employment.
So it would make it easier.
Absolutely.
100%. Make it easier.
It'll actually make it easier for the loan originator.
Correct.
Because now they're not going to be going through and trying to calculate this by having a good partner with an account executive that has these resources. they'll be able to turn that information around and help the borrower know what they could qualify with the technology of calculating income fast.
The next 12 months is going to be eye-opening.
Yes.
Of what's happening in
Scary.
that space.
Yeah.
I think when it comes to the technology front, AI is here and it's here to stay.
Yes.
It's not going anywhere. What I do see is a lot of people use AI, and that's what they call their technology. It's just an AI platform, and say, hey, we got technology. At Lens, we are being led by a lot of young, innovative folks that really understand the tech world. So we don't, our tech process is utilized from A to Z, from the moment you enter pre-qualification to the moment you close. Everything is tech-based, it's built by them, it's beyond the AI technology. So we do our pre-quals in 10 minutes, we do our underwriting in 24 hours from there, we register, we submit loans for the broker. We're trying to make sure that they have the time to go out there and build those relationships and let us handle the hard work.
And that's what I love to tell brokers. You focus on what you're good at, bringing in business.
Right.
And then we as lenders will help get this deal across the finish line. You keep bringing in business and we'll help with the backside.
If I could add on that piece is on the underwriting side, we're the exception process. We're having exceptions on about 30% of our submissions.
Okay.
So if it doesn't fit the box, call your local AE. Is what I would suggest.
Flexibility is important, and not everybody fits in a box, and those exceptions are essential. I mean, there's always going to be a couple yellow flags here and there, but the sooner we're able to get comfortable with it, the better it is for everybody.
Okay, so I'm going to do now a little crystal ball for both of you. Do we get another Fed rate cut? Who wants to take a crack at that one?
Well, this morning was a little bit of an eye-opener. So we thought yes. I'd say probably, I'm not in that industry, but I would say probably one or two small.
Yeah?
Yeah, that would be my guess.
Manny?
I think we're living in a geopolitical world, and who knows? There should be one.
Yeah.
But for some reason,
well, but in your guys' expertise, you think they should be should it be lower? I mean, it's not that, but it does affect you guys.
I will say this: I think we got accustomed to rates that really shouldn't have been there. We were in a zero interest rate environment.
Okay.
That's really not sustainable. It's even for just the market, the prices of homes. It's just not a sustainable thing. But right now, if you look at historically, our rates are below the average if you take back the last 30 years.
Okay.
So we're in a good rate environment, but I do think that a quarter here, a quarter there may help and stimulate more, especially with the high
But you got to also remember, though, when those rates come down, prices
go. Sure. I mean, nobody's going to lose.
No, it's never really
I get it.
time.
But for some reason, people see it the other way. Even though the prices will go high, but people feel like, oh, the rate's a little bit lower, I can afford that now. I mean, the person was going to pay maybe $7,000, now knows he's going to pay $5,000. Oh, I can.
And that's
it's
why,
Miami. Remember, it's Miami, USA. Everybody wants the best.
No, and that's why it's important what these guys have been saying, to have a good relationship with your account executive, to help them in the process earlier on, so that people know what they could qualify for.
Yeah, Manny, I said earlier, I'm not going to predict timing, on when is the greatest time to buy.
Yeah.
But I will say this: when they do cut the rate, do it quick before the sellers find out.
Yeah, okay, there you go. Well, on that note, thank you guys very much. I mean, we're going to continue with the next guest, but, Randy, Manny, thank you so much.
We appreciate
your insights in the whole situation. And we will continue with our next guest. Thank you.
Thank you, gentlemen.
Hey, good job. That was
Welcome to A Day in Miami podcast. We're here at the FAMP convention at the Lowe's in Miami Beach. Sammy, start us off here, man. Tell us what shop you're with. Tell us what it is you're doing here and what you're trying to accomplish.
So FAMP, Florida Association of Mortgage Professionals. So this event is set up for our local mortgage brokers that are looking to grow their business, network with vendors, really establish better and stronger relationships with people in the industry. Today we're joined by two great guests, industry leaders. We got Scott with A&D Mortgage, and we got Mark with A&D Mortgage and Scott with Angel Oak. And I'll let these two gentlemen introduce themselves.
My name is Mark Glazer. I'm a wholesale team manager, producing wholesale team manager at AD Mortgage. When agency and Fannie Mae say no, AD Mortgage says yes with our non-QM lending.
My name is Scott Grubel. I'm an account executive here with Angel Oak Mortgage Solutions. Been with Angel Oak for 9 years now, serving primarily Broward and Dade counties.
We serve nationwide at AD Mortgage, but we have a lot of good things going on in Southeast Florida.
Yes, sir. Yes, sir. And I think I think a big premise, a big topic of discussion the past couple months, years, past 5 years has been the growing non-QM space. I mean, especially here in Miami and Southeast Florida, where we have a lot of borrowers that are, working multiple jobs, have a side hustle, might not be your traditional W-2 employee, but still have income that could qualify them for a home. So I think a big point of today is to really help educate some of the brokers that have been on the more traditional, conventional side, some tips and tricks that they could do to grow their business, because they're leaving a lot on the table. And so, I mean, maybe we could start on your end, Scott, and what you think some of the more interesting trends you've been seeing.
Yeah, you brought up some great points, Sammy. The non-QM space as a whole is projected to grow 25% in 2026.
Wow.
Year over year, which is huge. That's going to outpace the overall mortgage origination market by almost double digits. So the expansion will continue to be robust. And there are a number of non-QM lenders, A&D, Angel Oak, just being two of them, that are going to be able to help facilitate all of that volume. The point is that there is massive opportunity for a loan originator, massive opportunity. And it's really just a matter of opening up your mind to understanding that non-QM can help you grow your volume, grow your customer base, serve an unserved market, like you mentioned, all those people, gig economy workers, self-employed borrowers, investors, et cetera. So the point, and I think that's really important for everybody to understand, is just look at the opportunity. When you look at your 2026 projections and where you want to be at the end of the year, where is that growth going to come from? Well, you have a space here where you're going to see double-digit growth. More than likely, that's probably where you want to focus your energy.
That's nice.
So what we do find here is that AD Mortgage and Angel Oak, we are trying to mainstream the market. So right now, if you're an agency lender, you keep thinking agency. We want you to take the agency hat off and understand that non-QM is the way in order to get loans closed. So don't despair with agency. Think of non-QM, mainstream it. When you have a customer, ask them questions. What do you do for a living? You're self-employed. Are you a nail technician? Are you an Uber driver? Are you a very large company, but your tax returns don't work? Think, listen, speak, communicate with your loan officers and your realtors and your borrowers, and put everybody together and say, okay, well, if they're self-employed and their tax returns aren't working, go to AD Mortgage in order to do non-QM lending. You can offer a self-employed individual a bank statement loan. You could offer them a P&L loan, no bank statements. In case of investor loans, you could do DSCR loans on investor, where it's all about the rentals, and it doesn't even matter whether they have income, whether they didn't have to show no income, no employment, no employer. So non-QM is there to solve problems. And also, non-QM is a door opener. So you could approach realtors and you could say, hey, you've got a condominium that may be non-warrantable. Okay? Well, the non-QM lenders out there are able to do a non-warrantable condo. Like today, a lot of the condos are having issues with insurance. So non-QM can mainstream you into a condo, open a door where realtors think they can't do it, and the loan officers have the ability to do that condominium. And hey, you're not carrying windstorm or not enough, AD Mortgage has the ability to put it, let's say, on an HO6 policy. So you're able to do that. You're missing flood insurance, separate flood policies. You offer this to realtors, non-QM. You mainstream it into your life. Don't just be agency, be non-QM. And you're going to get into realtor doors that weren't open to you before. They're going to be open to you now.
Well, let me ask you this, Scott, from some of this non-QM stuff, what are some things that mortgage brokers should be asking, aside from, helping pre-qualify someone who might not have that standard W-2 employee status or have the 12 months bank? Well, what are some questions that the broker should be asking?
Before you start that, to some of the people that don't know
Please.
what you're talking about, me, can you explain what non-QM?
Absolutely.
Okay, who wants to go first, me or you?
Go for it.
I'll go and you're next. So non-QM is non-qualified. So when you're doing an agency loan, those are qualified loans. Usually it's ATRs are big, ability to repay, and they're looking at tax returns, W-2s, pay stubs. So a lot of people today are very entrepreneurial. So W-2s, pay stubs, tax returns may not meet qualifying that agency, Fannie, Freddie loans meet. So what do? Non-QM. You could do a bank statement loan. You could do a P&L loan with bank statements and not. Investment loans, no income, no employment, no employer. If the property works, it works through the collateral.
Understood.
Yeah.
Thank you. That's me. I'm a 1099, so I have the whole tax return problem.
You're the perfect customer.
Well,
yeah. I mean, you're.
You know, he's paying taxes. You know, but you know.
Sure.
The nice thing.
Of course I am.
Of course,
You know, but the nice thing with a 1099 employment is, you know, you have your deductions, and so
Right.
you know, if you have these deductions, you're not going to be able to show and count all the income that you could be generating, and that's where I was going with, Scott. What are
That's
some
correct.
questions these brokers could ask?
That's correct. So to Mark's point, it is exactly that. Is as a self-employed borrower, business owner, 1099, Schedule C, you're taking advantage of the tax laws that you should be taking advantage of and writing off your expenses. So we know as lenders, we know that your tax returns are not a true indicator of your cash flow, of your income, of your revenue. But your bank statements are going to tell that tale. We're going to be able to look at your bank statements and see your deposits, if it's personal or business bank statements, and we're going to be able to do a calculation on those deposits to qualify you for that loan. So our loans in the non-QM space, to answer your question, Marcos, we sell our loans to the secondary markets, right? Hedge funds, institutions, Wall Street, et cetera, versus conventional loans, which are sold to the government, Fannie Mae, Freddie Mac, FHA, et cetera.
Got it.
That's pretty much the difference from your qualified mortgages and non-qualified mortgages.
Understood.
And then if you have an account executive like Scott or myself, we're going to look at your bank statements first. And if we see the deposits and we see there's issues, then we pivot to a profit and loss loan.
Correct.
So where bank statements may not be, because even deposits can be coming and they may not meet the standard. So then you say, okay, profit and loss, no bank statements, but the income is there. Profit and losses are generally done by certified tax preparers or CPAs. So it's up to them to give us the determination of a gross income and the operating expenses that we would work with. So, and they sign, date, and they attest to a P&L, and then we're able to use that.
Got it. So I'm assuming that when the returns are off, for example, how are you getting penalized? You have to put more down.
What do you mean by you say, hey, okay, you might not be generating enough income to qualify for a loan.
Exactly.
So
you basically end up having to put more down.
There's some mitigating factors, Scott. What were you going to say?
I was going to say, I mean, it's not really penalized, depends on how you look at it, right? Because
Depends who you are.
No, so I mean, non-QM lenders for the most part go up to a 90% loan to value, so you can put 10% down, buy a property. The pricing is slightly higher than what you would see on the conventional world, but that gap has been shrinking. So for example, if it's an investment property, most times it's often common that we price better on the non-QM side than we're seeing on the conventional side because of what's called loan level pricing adjustments that conventional has kicked in. On a primary residence, we'll be slightly higher. But to your, when you said penalized, the other way to do it would be show all your income, pay Uncle Sam, or just take a little bit of a higher rate, which you're going to be able to write off on your taxes anyway. So I don't really see it as being penalized.
When you put it that way, then I get what you're saying now.
But you know, Marcus, you want that house, okay? So non-QM is a want loan. Agency and Fannie Mae are want loans. Non-QM are need loans.
Bingo.
So non-QM need loans, and under those circumstances, you want to buy that home. You need to close on that house. If you don't, you're going to get yelled at by your family.
Yeah,
right?
I'll be sleeping on the floor for 3 months.
Yeah.
So,
Or worse, at your in-laws.
And so, like, I'm sorry, go ahead, Mark.
but as a need loan, non-QM as a need loan, you need to close on that home. You may have gone agency to look, and it's no. The agency said no. Then again, here it is. AD Mortgage says yes when agency says no. And it's to your need, I want to close on that home. And if you have tax returns that you have worked and within normal guidelines, but you're not paying a lot of taxes because you have a great accountant, there you are. A bank statement loan or a profit and loss loan will get you through because you want to save money on the IRS. So AD Mortgage, non-QM need loans, that's the deal.
Yeah. And to add to that, Mark, because that's a good point, is, you could qualify for a conventional loan using your tax returns, what you show on your W-2. but that might only qualify you for a $400,000 property, $500,000 property, but you know you make way more than that, right? So when we look at your bank statements and we tally up all of the deposits coming in, we do our calculation, we're going to see your true buying power, and it's often, right, we'll look at tax returns, qualification, maybe $10,000 a month in income. We look at the bank statements, we bump that income up to $30,000 a month. So we've literally more than doubled the buying power, so you can buy the house that you really want.
That's a great point.
And we're following the bank statement. So to his point, the bottom line is that, again, we are not making anything up. We're not bumping. We are looking at the gross deposits in your bank account.
Yep.
And if the gross deposits are coming from the business that you're doing, it's valid.
Tell a different story.
Absolutely.
No, I think that's really creative. I think another interesting point, maybe we could share some tips to these brokers that are trying to get into the non-QM space. I mean, it's the stuff that we're talking about. It's pretty heavy-duty stuff. P&Ls, CPAs, looking at different sources of income. What is a step that a broker could take to kind of start building out this line of business and generating revenue?
You take that first question, I'll do it after.
Thank you. I think the step is just like they did when they dove into the conventional space. You want to educate yourself on the products available in the marketplace. Every lender, AD, Angel Oak Mortgage Solutions, we all offer plenty of information on our website where you could go in, learn about the different products and programs, bank statements, DSCR, profit and loss only, 1099 only, asset qualifier loans. I mean, we can go on and on. Home equity lines of credit qualifying with bank statements, but
the list goes on and on.
It goes on, and it's really just a matter of investing the time to educate yourself on what those programs look like. From there, I always recommend building a relationship with an account executive at a non-QM lender that you feel comfortable with, and then adding to that, because no one non-QM lender can do everything.
No, and that's why we're here today.
Exactly.
That's why this FAMP convention exists, is so that brokers could come and educate themselves and learn a little bit more about what's out there.
Correct.
So that they can continue to grow their business, because it is overwhelming. I mean,
100%.
you say open the website, it's tough, but that's why these events are very, very important, to build those relationships.
To
and learn
network
more.
and build relationships.
Well, also to understand this, you are an agency lender. I'm going to quote a great movie, Disney, let it go, let it go. Agency needs to be available, but you need to be able to have time to let it go and address and understand that you could mainstream non-QM. You could make it part of your thought process. So when you're thinking an agency, you're thinking, oh my God, I can't do it. No, you're thinking initially, oh, it doesn't look this, but pivot to non-QM. And the likes of Angel Oak, the likes of AD Mortgage, we're there to help you do that pivot. You should be doing it in a minute, in an instant in your head when you're looking at a loan and say, this is an agency loan, or this is a non-QM loan, and have that decision and then move forward. You shouldn't, you need to be able to add it to your thought process, and I always say mainstream non-QM in your process.
Let me ask you this. So what are some tips and tricks that brokers can do to increase the probability of execution? What should they be doing up front to be, getting rid of some yellow flags ahead of that?
Read.
Read.
Reading is fundamental. Oh my God, absolutely.
You mean you got to work? You got to work a little bit?
You can't watch YouTube videos?
You have to be able to make yourself or educate yourself, let's say on a bank statement loan. Do yourself a favor. Instead of just sending the bank statement in and not looking at it, read the last 2 months of bank statements and get to know the customer.
Peel the curtain back. Peel the curtain back a little bit. Look under the hood.
Yeah.
Oh, absolutely. And then listen. So you got reading is fundamental, and listening. Listen to the needs of your borrower. What do they want? And then finally, ask questions. Don't be afraid to ask questions to your borrower about who they are, and of course, the collateral. What are you buying? So if you know about the collateral, there may be bumps in the road there. You know about your borrower, how they conduct business, and then finally, read guidelines and compare them to the material that your borrower has given to you.
That's a great tip. It's you have to interview your customer a little bit more in depth when you know you have a self-employed borrower. And Marcos is a great example because he's an entrepreneur. And you have income sources, I'm assuming, from many different areas, right? So if I sat down to interview you for your loan as a loan originator, I need to know all of that information. Where are you drawing income from? What are the services you're providing for? How often and how frequent are they, right? So it's just asking those questions, interviewing your borrower a little bit more in depth when you know that they're a self-employed borrower or an investor or a 1099, entrepreneur, side hustle, whatever the case may be.
And that's what's nice about working with A&D and working with Angel Oak. They have account executives out there that know this inside and out that could help you get up to speed and get those lines of questions that you need to get for them to help you get the loan across the finish line. And that's the very important part of having a good account executive, someone that you could lean on and rely on. And that's, both of you guys are powerhouses when it comes to having AEs.
Thank you.
Question, how soon before a purchase would you recommend people to start getting their ducks in a row?
Great question.
That's a great question. I would say as much time as you possibly can. At least 60 days. If you can do 90 days, even better. You want to be able to sit down with your loan originator, go over your scenario, and they can start to structure what your loan's going to look like. Then they can get with your account executive, get with Mark, get with Scott, or who your account executive is, and start to calculate the bank statements, see what your buying power is, look at your credit, look at your 1003 and your overall profile, and then we can say, okay, Marcos, based on the information we have, we know you can afford a house of $1 million or whatever the case may be, and now you can go out shopping with your realtor. So you want to give 60, 90 days time frame, ideally. Doesn't always happen that way.
Yeah.
But that's ideal.
But also, Marcos, you're going to want to get together and understand your family, where your money is. When the LO is speaking to you, let's say you're the borrower, we're going to find out where your money is located. Is your money available currently? Are you needing to wait a month till you get invoices paid in your business? Is your money here, or AD Mortgage allows funds abroad? We count money overseas.
Oh yeah?
Like any other transaction. For non-QM, non-QM overseas funds are fine. Agency has issues, but we don't care. So it's pretty cool doing that. So know where your money is, and then get where it's about. At AD Mortgage, we only need 1 month's bank statement. So understand, get ready, be ready with your funds. And then next, the second thing is know where your money is and know how you're earning the living. And then when you're going to be talking, you want to find out your LO is going to be addressing you, and you're going to find out how you make your money. And then that's where bank statements come in. That's where profit and loss come in. And then if you don't show anything, if it's an investor loan, debt service loan, and you're good to go.
Nice. All good stuff. Now, if someone, a mortgage broker tuning in right now, where's the best place to find you guys at?
Well, you could find Mark Glazer at AD Mortgage. I'm at 954-309-2960. And I'm at MARK.GLAS as in Sam, ER at admortgage.com. Once again, 954-309-2960. You could reach me. I'm a producing manager there, and I take on clients, and I could give them my 35 years plus experience in getting the job done.
That sounded like a voicemail.
Oh, he's done this before. What about you? Where can we find you at, Scott?
Best thing to do is make note of our website, Angel Oak, MS, M like mortgage, S like solutions.com. You can find any of our account executives there, myself included, all of our contact information, our loan and product information, guidelines and details about our products. And then for myself, I'm very active on social media. I'm at SGRUEB on all social media platforms. You can reach out to me directly there.
Papa, you can find me on Instagram at Caballo305.
Thank you guys very much. That was awesome.
Appreciate
it.
Thank you.
Thank you guys.
Good morning, good afternoon. I'm not really sure what it is, but we are here at the FAMP event here at the Lowe's Hotel in Miami Beach. And we have a beautiful panel sitting here in front of us today. So I'm going to go down the line and let everybody introduce themselves and tell us what they're doing here today at the FAMP conference.
My name's Ray Duran. I'm a senior VP at Quantic Bank based in New York City. And we're here just to talk to everybody and share our great news and all the great programs that we have to offer.
Hi, my name is Milvia Castellano. I'm with BB Americas. I am VP of Sales in Wholesale Lending. I also run the division, and I'm here also as an exhibitor, showing our programs and educating our brokers on what we do.
My name is Robert Bencomo. I am the Miami chapter president for the FAMP, also CEO of Elite Lending. I'm just here to kick it with you and ask some questions.
So Robert, chapter president, what does that entail?
a lot.
So, I mean, are you the man behind the scenes here today, hosting everybody, 800 people here, the biggest money makers in Miami, all the power players?
I'm a small piece of that. We have a massive team of people helping out that are doing this for a good cause. So there's a big team behind putting this event together, and we're obviously gracious for all of our sponsors and all of our exhibitors for being here, and happy for you guys to be here and to show what this is all about, and adding value to all the mortgage professionals in South Florida.
And this is an annual event that you guys host, correct?
Every single year. We are actually the oldest mortgage association in the state of Florida.
Wow, beautiful. And what year is this conference? Are you sure?
Older than me.
Can't count them.
It is older than me.
And Ray, what about you? How many years have you sat on the board?
Just this year. This is my first year on the board. I've been actively in the mortgage industry for longer than I care to say.
I'm not trying to date anybody here. So.
Well, I've been in the business for 40 years, and I started doing loans when I was 5. Just so you know.
So you've seen it all. We've been through the ups and downs. What would you consider this market that we're in? I know a lot of people have questions. Right time to buy? Is it a good market? Where would you place it today, Ray?
This is a great opportunity for investors. This is exactly when everybody wants to buy.
So you would say it's a buyer's market?
Absolutely. Somebody who's intelligent buys right now.
Beautiful. And Milva, what about you? Obviously, you're seeing a lot of deal flow coming across your desk and your team's desk. Would you agree with Ray? Is today the time to buy?
Absolutely, definitely.
I wanted to piggyback on that. I wanted to go back to Milvio, just to let everybody here know what loan programs does BB Americas offer.
Well, BB Americas offers we specialize in anything between $250,000 to $10 million in loans, and we do both domestics and foreign nationals. We are owned by the biggest bank in Brazil, so obviously foreign lending is our specialty. We know the ins and outs and how to financially qualify them and make it easier for a seamless process.
And Ray, what about you?
I work for, my bank is based in New York City, and it's owned by mortgage professionals. So the owners of my bank used to own New York Mortgage before the crash. They actually sold the bank a year before the crash, made a lot of money, went out and bought a federally chartered bank when the crash happened, and that's basically who we are. So we specialize in light dock, owner-occupied, in 100% in gifts for investors on DSCRs and light docks, VOEs, prepared by the employers that don't get really verified with tax returns. And that's basically our bread and butter. We also do a lot of HE-loans, also stated light dock, VOEs, P&Ls prepared by tax preparers. That's basically our bread and butter. That's what we do.
And you both are wholesale lenders, correct?
We're wholesale and retail.
Okay, fantastic, because we throw the word bank around a lot, and we're at a mortgage brokers conference, so a lot of people get confused. Why are brokers, sometimes brokers like to say brokers are better, right? Would you agree? Obviously, you have some retail side, so you got to play defense there.
No, not at all, not at all. Mortgage brokers bring a lot to the table because they give the clients a lot of different products. They have the opportunity to go to me, to BB Americas, and they have the opportunity to go to different players. So they actually bring a lot to the table. Mortgage brokers are very essential to our business.
And Milvia, how do you feel about mortgage brokers?
Well, I live off them. They're my boss. So honestly, what it does, it brings options. It brings options to your customer, because not every customer is going to be tailored for a specific bank. So a bank has 1, 2, 3 products. The broker has 15, 20. So it just brings options. So definitely brokers are very important in this business.
And Robert, from a broker's perspective, why are brokers better?
I'll piggyback on what both Milvia and Ray said. I mean, we have options galore. Like, we can place loans anywhere. We're not tied to a specific box, a specific lender, a specific set of guidelines, a specific set of underwriters. We have the opportunity to shop for our clients and get them the best deals, the best rates, and the best programs. I mean, it's the best for the consumer, and it's the best for the broker community.
So here in Miami, I know non-QM is probably the standard, right? What percent would you say is coming across your desk, Robert, that is a non-QM loan, and how valuable are partners like these two wholesale lenders?
they are the reason why we stay alive. I would say a good 40 to 50% of our business is non-QM, and within those non-QM fall in the four nationals, all those different types of buyers that we deal with. But in Miami, everybody's an entrepreneur.
Right. I mean, to qualify for a house here with today's rates and the property values, you either have to have 4 W-2s or you got to be a non-QM borrower, right?
Absolutely.
That is correct.
A little bit of, side hustle. Everybody, they used to say fraud. I know that's a hot topic. You guys probably figured out how to spot a fake pay stub by this point. AI has been helpful. What are you guys seeing in the non-QM space that is still concerns for the business?
Well, I'll say in my aspect, I mean, I don't do true DSCR loans, but I do four nationals, and our process is very simple, very logistically put together. So we qualify the borrowers with a CPA letter. So, sometimes you get a CPA letter that doesn't collaborate with the amount of liquidity. So that's a risk. It's a risk, and so we have to obviously determine these loans and make sure they make sense. So that's where I come in, look at the loans and make sure that everything
and you're coming back with the conditions to...
Conditions, conditional approval, and then we take it to closing. So if you follow my lead, I'll get you to the closing table.
Oh, I like that. Follow her lead and she'll get you to the closing
That's
table.
a slogan. We got to put that on the shirt.
Oh, yeah. Print that all over. And Ray, what about you? How would you say you guys are, making sure that the deal's a kosher deal despite it being a non-QM loan?
We look at the client's credit history. It's very important to us. It gives you a background. It gives you a history of the client. Is he worthy? We look at his assets, and that's basically what we're looking at. Because if you look at a client and he's buying a $2 million home, he has a few $100,000 in the bank, has an 800 credit score, he's self-employed, he makes the money, he just has a very good accountant. So this is the kind of thing that we look for. We look for a client that makes sense.
And I think the last panel did an excellent job in highlighting that is, El Caballo called it being penalized for being non-QM, but the reality is there's tax advantages, and that's why people are typically leaning into a non-QM product is because, like you said, they have a great CPA, they have a great accountant. And so when people see, or think they're getting penalized on the rate, the reality is they're really just taking advantage of the tax code and saving a ton more on taxes.
The reality is, in today's market, you're really not getting penalized too much anymore.
What would you say the difference in the spread between?
Depends. You have a good down payment with a good credit score. It isn't that much. Maybe a quarter or a half. In some cases, it's priced even better.
And the LTVs, you're still able to get great LTVs. Not the 3%.
Well, you're going to see a bigger adjustment in the LTVs. When you have a light doc program or something like this, and your LTV is high, you're going to pay for it. Absolutely. But if you have a good LTV and you have a good credit score, your rate's going to be pretty good. In today's market, it's not like it was a couple of years ago where it was a 1.5 difference in the rate. It's not like that anymore.
And you guys aren't also just looking at the borrower, right? The property matters, right? And a big thing in South Florida here is the condo market. And the condo must qualify. And a lot of people don't understand that the condo itself has to qualify. So do you guys have already approved condo associations that you have everything filed and it's a much easier loan? Are you still qualifying condo associations? What is that process for the brokers tuning in here that maybe don't have a qualified association? Can they still get the loan done?
Well, I'll speak for myself. BB Americas doesn't have a approved condo list. That's what makes us different, and that's what makes us a portfolio bank. So we determine every condo at the time of underwriting, obviously a little before, just to determine the condo meets our criteria. What meets our criteria is make sure the condo is at least 50% sold. There's no alarming delinquencies that we should be aware of, but it doesn't have to be Fannie Mae approved. As long as there's nothing, again, alarming, we will take a look at it. The only type of condo that we don't do is a condo hotel. Everything else, we will look at it on a case-by-case basis.
And alarming, are you talking like structural damage?
Structural litigations, stuff like that. If there's HOAs are more than 15%, delinquent, that's a concern for the building for itself. So it just depends, case by case. But right now, all the new buildings that are up in Miami, we're doing all of them. There's about 7 new buildings going up, and I'm probably the only lender lending in all 7.
Wow, you're ready for first.
Yeah, that is great. One thing that I did want to add to that I wanted to circle around is is talking about like loan amounts and LTVs, like for both of you guys. I know Milvia personally. I've worked with her on plenty of deals, so that's something that's it's a niche in her business of their loan amounts, because they're, you know, in today's market, you can't buy a house in Miami anymore for less than $1 million. So
and I feel like $10 million, if we were talking 10 years ago, it didn't sound like much, pero es una efficiency casi hoy en día.
Nowadays. But I'm probably the only lender, the only bank. I'll call myself a bank. I'm the only probably bank in this room that has a legal lending limit of $54 million.
Wow. So that means, obviously, loan limit of $10 million. But that means the same borrower can buy several properties.
I have an advertised loan limit of up to $10 million. However, case by case, we have a lending capacity up to $54 million.
So here in South Florida, almost nothing's off limits for you.
Nothing.
Beautiful. Ray, what about you?
Not 54. Definitely not 54 million.
Yeah, that's kind of a high number. I'm sorry. We should have asked you first. That's hard to beat.
No, it's okay. But look, there's a lot of things that we do. This is why mortgage brokers are so important, right? Because she's looking at 50% pre-sales. We're not. We don't do that. You know, we'll do non-QM and we'll do.
Do you guys have a limit or a requirement?
No, we don't. We have to look.
No
a lot
requirement
of times we deal with the sponsors. In New York, they call them sponsors. Down here, it's the developers, right? So as long as the developer has assets set aside, we'll work with it. The financials have to make sense. If there's a litigation, it depends on the type of litigation it is. Usually you get an attorney's letter, opinion letter, things like this, but we work a lot with condos, you know? So if it's not warrantable, we'll do it non-warrantable. We'll do non-warrantable up to 80%, you know, which is pretty good. And that's a light doc stated program too. So there's a lot of things that we do that they don't do, and there's a lot of things that they do. 54 million.
I don't do that. That's a good program.
You win 54 million.
and that is the benefit of a broker, right?
Exactly.
Is we're here to educate them today, and I hope they're tuning into the podcast, hearing the difference between the loan programs that are offered, so that they know when to pivot. You know, one of my favorite scenes from Friends is when, you know, they're going up the staircase with the sofa, and Ross is going, pivot, pivot. My wife is a mortgage broker. And I yell it to her all the time. I hear her talking to a borrower on the phone, and I just yell, pivot, pivot.
You gotta be light on your toes here.
So we talked about loan limits. We talked about, you know, qualifying the condo associations. So those are both residential. Do you guys offer any commercial loans as well?
We don't. At this time, we don't.
I run the residential department, but we do have a commercial department. So if any broker wants to get a hold of me, I can put you in contact with commercial.
Okay, excellent. Robert, was that a hand raise?
No hand raise.
Man, I mean, you got an open mic here.
No, but Robert does commercial.
I do commercial, yes. We do have a commercial division. We do both residential and commercial division. We have a full-blown staff for both of the divisions of the company. So yes, we do, and any types, bridge, fix and flip, ground up construction, new development, multifamily. So we have a full spectrum, residential and commercial brokerage, business lending, all of that. From A to Z, we can cover any single borrower. Again, it lends itself to our business because of the amount of non-QM that we do. We have a lot of business owners, a lot of entrepreneurs, a lot of business owners in the market that always need that commercial lending aspect of it. So we do offer all those loan products.
So, you know, this is going social media, and you guys want clicks, right? So we got to talk about one thing. I want to hear the most difficult, or what seemed to be the most difficult or impossible deal that you guys still got done, and why it was only going to get done with you guys.
We've done a difficult
Let's hear it.
Yeah.
Man, those eyebrows went up, man.
Yeah, we've done the biggest deal of my career I did with Milvia, so I gotta definitely thank her for that.
And the borrower took us for a ride. Yeah. Definitely.
All right.
Yeah, but we're celebrating today.
So what made that deal so hard, and how were you guys able to work through it together as a partner and get it done?
I'll let you take the lead on that.
Yeah. So we had a Mexican borrower, made $500,000 a month, had $142 million in Merrill Lynch. Little did we know that they were all pledged. He was building a development back in his country in Mexico, owed money to half the world. Obviously, nobody knew. When he closed, all this fell on top of us. All his assets were pledged, but we made it look pretty. We got it approved. Again, he provided us what we needed. Who knows what was real, what was not? At the end of the day, we struggled for 3 years, but thanks to Robert, we worked together and we got him off the books, and we got paid. He got paid. We all got paid. So we lived happily ever after.
And that's the point of the story.
And
we got paid.
And that was $9 million, guys.
Yes.
Wow, nice loan. Good for you guys.
Yeah.
Ray, what about you? Coming out of New York, I'm not going to limit you to a Florida horror story. You probably got more of them in New York.
Honestly, every single deal you do is like a can of worms. You ask for one bank statement, you get 5 deposits that have to be sourced, and then you ask for that statement, and there's another deposit from other bank accounts. Every deal is very different, and every deal has its own little challenges. So for me to limit one, honestly, I don't know. There's so many. It really is.
Ray is right. Every deal's a challenge, and not only that, but you ask them for one thing, and they give you 4 things, nothing of what you asked for.
And it opens it up.
Which opens up the bag of worms, which now you have another 6 conditions to clear that one condition that was simple.
And just a few letter of explanations.
Exactly.
This business is like that. You could have, we say it all the time, I could have 2 borrowers, identical, same pay structure, buying the same house, and it could be a completely different deal because of one document.
Yeah. That's it. That's just the way it is. That's the nature of the beast.
All right. So, Robert, chapter president, hosting a beautiful event here. Close us up. Last few words.
Non-mortgage related.
Perfect.
Who are you guys taking for the game on Monday? That's what we need to really talk about.
I don't want to get in trouble getting out of here, but I'm a Gator. Diehard Gator, and
he doesn't have to say anything else.
Let my eyes say it. But, I got a lot of UM fans in the friend group, so I got to go for UM.
All right. The U, baby.
The U.
I hope this doesn't make it to the final clip. I'm not throwing up the sign, but I got to pull from my hometown.
That's what I wanted to hear. But listen, in all honesty, I appreciate every single one of you here. I appreciate everybody that exhibited, sponsored, all the attendees. Without all our team at the Miami FAMP chapter, none of this could have been possible. And I appreciate every single one of you here.
Congratulations on the hard work. It paid off, and beautiful event.
Thank you, guys.
Thank you for having me.
Thank you so much.
Ready? 3, 2, 1.
And here we are coming to you live from the Florida Association of Mortgage Professionals Winter Conference here in Miami at the Lowe's Hotel. This session is going to be focusing on government affairs, touching on some of the latest legislation, some of the lobby work that we're doing, and filling in some brokers on some of the latest and greatest stuff that we've been working on. Joined with Orlando, our current president. We have Sean, who's our lobbyist over here, as well as Rick, who manages the government affairs. So if you want to give us a quick introduction about yourself, Orlando.
First of all, it's awesome to be a day in Miami. I follow you guys for a long time. It's definitely a pleasure to be on. A little bit about FAMP. We're a 65-year-old association. We represent 55,000 licensed originators in the state of Florida. And at the FAMP, not only do we educate, we also advocate and market for the mortgage professional. What this crew, this is our legislative crew here.
The dream team.
The dream team. And what we're able to do, with the time that we have, because we're all, we all have our own businesses, so this is time that we dedicate to the association. We've been able to do a lot of very important legislative issues that have helped the mortgage broker. And by helping the mortgage broker, we're helping the consumer. Because at the end of the day, what we're doing is open up avenues so we can make Florida more affordable. And affordability is the big issue in Tallahassee and all the state of Florida, and that's what FAMP is on top of. And also, you could have as many realtors finding you houses as much as they want, but if you can't fund them, you can't get them.
It's a pipe dream.
It's we help people get into the American dream. So this crew right here that we have together, what we focus in is advocating for not only our mortgage brokers, but also our consumers, which is the home buyer, the one who's trying to get the American dream.
Amazing. Thank you. Sean?
Yeah, Sean Stafford. I'm with the firm McGuire Woods Consulting. It's actually a Richmond-based firm, but we have the Tallahassee and the Florida office for lobbying and consulting. And we've been with FAMP now for almost 4 years. started a partnership about 4 years ago of assisting them in Tallahassee and across the state in government affairs and trying to help them push through initiatives and really defend the industry. And it's so awesome to be in this great location in Miami. There's some serious energy in this building. This is a very loud, cool place. But yeah, no, it's great working with everybody here. It's hundreds of very type A personalities. They're all in sales. They're all aggressive, and I think it's fantastic.
Great. What about you, Rick?
Well, I am the Government Affairs Chair, and when I came on, I had this idea of getting involved early, not waiting for the legislators to decide what the bills are going to be, but getting involved early and making an impact early on the legislative process so that we could effect change that helps the mortgage broker and by extension helps the individuals that are looking to buy and finance homes. So the big focus that we've done in the last 2 years since I've been on the government affairs is to have ideas, to speak to the people that make decisions on those ideas, and then from there try to affect change on current legislation or possibly write legislation that fits what we're trying to do.
And I'm assuming this kind of the legislation that we're talking about, Orlando mentioned affordability. What kind of legislation are we working on in 2026 that the people should be aware of?
Well, first and foremost, in Florida, as you know, the biggest thing right now is taxes.
Yeah.
They are talking
These
about
property taxes are out there.
There's a dozen bills out there. They're all over the place, and I think there's going to be movement on this one way or another. I think the governor wants it. I think that this is going to be a huge impact to the consumer, and it's a badge that he's going to be able to carry on whatever future he decides to do with his political career after being governor. So I think it's a big focus of his in the next year to get this done, and I think it's going to end up on the ballot in November.
I mean, we've been hearing about it in mainstream news about, potentially getting rid of property taxes, helping with the affordability. Is this the stuff that you guys are talking about?
That's some of the stuff we're talking about, and we're talking about small stuff too, stuff that impact the individual loan officers, stuff that has to do with compliance, with everything. We focus on the bills that impact our customers, and by extension, if it impacts our customers, it impacts the consumer. And whatever helps our customer makes homes more affordable. Because if we streamline the process for a mortgage broker, it means that he has less costs that he has to defer to the consumer. So whatever we help, it helps at the end the consumer.
Oh, that's amazing. That's amazing. I mean, and I guess, Orlando, what are some of the things that, mortgage brokers should be aware of that coming into 2026 in terms of legislation that they should be helping educate their clients, their borrowers?
Well, there's a couple of issues and that we're advocating for. Obviously, the property taxes is a big one, but it's more that we have a seat at the table now to be able to discuss property taxes because of the work that we did for condo reform. So when condo reform was coming up, we were lobbying legislators and saying that you needed to soften the blow for some of these associations. And luckily through Sean's contacts and constantly going to Tallahassee, speaking to legislators, we became a stakeholder in that bill. And we were getting in all the iterations of that bill prior to it going on the floor, and we were putting our input into what we felt was the right thing for the associations, because we do obviously a lot of condo loans.
Miami is probably the largest condo market in the country,
and that has really spearheaded our legislative efforts to now where we are speaking with legislators about the property taxes. But it was the condo reform bill that actually put us in the map in order to be able to discuss these issues and have an actual say in what happens with property taxes, which again affects affordability.
It does. It all trickles down in. And maybe, Sean, we could talk a little bit some about the condo legislation that FAMP has helped to work on?
Yeah, so as you all remember the tragedy that occurred in Surfside years ago, there was a significant effort to reform and improve the condominium associations, improve the building structures. That's been pretty successful over the last few years. And the challenge has been, how do you soften the blow with assessments for people on fixed incomes and seniors who've been in a condominium for 25 years, now they're faced with a $180,000 assessment. So what happened was, over the last few years, the legislature put a number of initiatives in to give more flexibility, to allow to stretch those stretch out the timelines a bit and soften the blow a little bit, so that you don't have folks having to walk away from their condominiums. But one thing I know that a very important issue that we've all been working on, and Orlando and Rick really spearheaded, is the limited review issue, which is probably if we're able to get this over the finish line, will be the biggest impact on affordability in this state in a very long time. And I don't know if y'all want to talk about it. We can talk about our work with Congressman Donalds on that.
Yeah, I'll talk a little bit about what the problem is, and then Rick, you could probably come in and chime in on where we're at. So, and this would really affect everybody in the state of Florida. If you try to get a conventional loan, which is a Fannie Mae or Freddie Mac loan, and the condo does not get approved for XYZ reason, somebody will have to put 25% down to buy that condo to get a Fannie Mae Freddie Mac loan, which has the best rates in the market. That's okay. If that's the rule, that's fine. But for all 49 other states, it's 10%. So Florida's the only one that's been singled out and had to pay 25%. And this has been a rule that's been there forever. So when we started our legislative agenda, Rick brought it up to my attention, and I was like, no, we got to kill this, and we got to go after this. We got to make sure that we make it even. They call it geo-targeted. They have geo-targeted Florida as the only state that has to put a bigger down payment requirement for condos that don't meet certain requirements. We felt that was not fair, and we're asking that we be treated just like every other state. So we put a plan in place. We've flown to Washington, D.C. We have met with Congressman Donalds, which is the front runner for the governor of Florida. He's running for governor, and he's the front runner right now in the Republican Party. He has been instrumental. He has penned a letter to the FHFA Director Pulte, and to let him know that this is not right, especially right now with the affordability issues that we have. How can you limit people's down payment when the rest of the country has a 10%? Why would you? And not even, and going from 10 to 25, that's a huge jump. And we just feel that it's unfair. I don't know, Rick, if you want to put some more color into that.
Well, so when we spoke about me joining the government affairs team, I've thought that this was unfair for many, many years, and I'm like, well, if we're going to do it, this is what I want to do. This is the one thing I want to go after. So this doesn't just impact the buyers either. If you think about it, if there's an old lady, for example, that owns a condo that she's had for 20 years, the assessments go up, and she can't afford to make the assessments, she puts her home for sale, and now she's limited to buyers that can put 25% down. That lowers her market. So that lowers the price. So people can come in and say, hey, I need to put 25% down. I'm going to offer you 10% less on your condo. So it affects what she can get out of her condo. So it doesn't just affect the home buyers. It affects the home sellers, and it affects entire neighborhoods and projects and their ability to borrow as well. So it's a big issue. And what I tell legislators when I speak to them, this is the single biggest thing that they can do for the housing market in Florida that doesn't cost taxpayers a penny.
Doesn't. No, you're right.
And it's not even a bill, it's a guideline change. So it's something that they can make right away to change it, and that will do more for affordability than a lot of the stuff that's going on in the legislature right now. Now, the property taxes will make a huge difference because you have your principal, interest, tax, and insurance. Principal, we can't really do much about the value of homes. That's market-based. Interest, yeah, they tend to be starting to go down a little bit, but it's market-based at all. Taxes and insurance are stuff that we can legislate for. So, that's why we're hitting up the taxes. But this one issue will help affordability more so than a lot of stuff that's going on right now. And that's why we took it on as our main singular issue, and we're this close to making that change.
I think that's very, very important for, FAMP, like you mentioned, we have thousands and thousands of members, so it's really important for members to know, hey, this isn't just a networking, get together, meet some lenders, meet some vendors. There's a lot of behind-the-scenes action that's being taken where dues and fees are going to help support these other broader efforts that are going to help them in their business. And shame on me for not being as involved in it, because this is some serious, serious matters. When you talk, I live in a condo. from 2015 to now, it's crazy how much the HOA and special assessments, and I look around my neighbors that are on fixed income, it's not easy. It's a real problem. These hit real people, and it affects their families. It puts them in uncomfortable situations. So that's great work. I mean, what are some things that maybe mortgage brokers can be doing to helping? I mean, getting involved. I mean, we have many chapters in Florida. So where are maybe some other chapters that mortgage brokers should be looking at to get involved with FAMP?
Well, we have a combination of chapters and regions. So we have in Broward, we have obviously Miami, who puts together this show every year, which is phenomenal. We have Broward that does their own great trade show as well. We have regions in Tampa. We have regions in Fort Myers.
Orlando.
We have Sarasota. Orlando has actually the biggest chapter. The chapter president is here today. She does a phenomenal job over there. So I would say the first thing is to do is to, step one, join. You know, just with those funds, we're able to put together these educational events, trade shows, networking, and we use it as well to travel to Tallahassee and be able to affect change. The second one is participate. You know, come to these trade shows. Start to talk to other mortgage brokers to see what they're doing. Sometimes you have a problem and somebody knows how to fix it, and vice versa. And then the third step is participate. That's where the stages we got in there. We decided to not only just do the step one and step two. We decided that we wanted to come in and get involved and make change. I came in 7 years ago when I said I wanted to know what FAMP was doing for the small business owner, and then when I realized that there was an opportunity there for me to have my voice, and 7 years later, I ended up as president of the association, but that it wasn't the initial plan, but it kind of worked out that way, and this is the industry that puts food in our table. This is what has put my kids through college. So I am loyal to this industry. I'm a lifer to this industry. I want to give back to this industry. And Rick and Shauna, they do the same thing. So I would say the first thing, join. Just join and start coming out to some of the events. So, we also have webinars as well. We have continuing education. We do a lot for the mortgage broker community, and all you have to do is just participate a little bit, pay us your dues of $149. It's not going to break the bank, but $149 with the amount of members that we have does allow us to work. So I would say that's what you got to do. Come to these events. This event took a year to plan.
And for those that aren't here, my gosh, we have over 1,800 registered people that are coming to be here. Probably around at least half are here. We have over 100 exhibitors around, and a lot of great continuing education, specific breakout sessions, and amazing people to meet. So if you didn't come this year, make sure you put it on your calendar. Keep a lookout. Broward has one, Orlando has one.
Yeah.
Does other regions have one?
And then the main state, the state trade show, which is in August 15th, which is in Orlando. That is 3 days of this.
Wow.
So, and that is a phenomenal event. And but Miami always sets the tone. Miami always sets the tone. How Miami's trade show goes is how the rest of the year goes.
And this
and
is
right
a
now,
great indicator.
And then right now it's looking good.
Yes.
Right now it's looking good.
No, that's awesome. And then maybe Sean, can you touch on maybe what we could do as mortgage brokers in the space to help raise awareness, to help your lobbying efforts and push the needle a little bit further?
Yeah, I think what Orlando, I'll back up what Orlando said, which is first of all, get involved, join, and then once you join, you can become a part of a team that essentially helps educate members, legislators around the state. There are key legislators in all different pockets of the state where we have a lot of very active members. Some of the best lobbying is done through grassroots efforts, emails, personal phone calls. If you know a state house member, we have a lot of brokers who have personal relationships with their legislator. They've known them through different business clubs and community clubs, and if there's a problem, which there inevitably will be, you can call them and weigh in. That's a very meaningful. It's not a lot to pick up the phone and make a phone call or two, but the dividend on that could be huge, and the ROI is significant. So I think getting involved and sort of staying attuned to what's going on, and we'll push out information for this legislative session as it comes in. It's going to be 60 days. It just started this week. The legislature actually cranked up on Tuesday, and then they're going to go all the way until the second week in March.
No, I mean the work that you guys are working on and doing it's I don't want to say the Lord's work, but it's pretty close because, it's one thing to qualify for a house and to make the payments, but when you're talking about taxes, you're talking about insurance, you're talking about these special assessment, these are costs that aren't really too predictable. Sometimes with the taxes they can be, but I mean, be able to save households thousands of dollars and help them continue to grow their family, I mean, that's what it's all about. We put people into homes and they're growing and they're helping their local economies out.
Yeah, and we're pretty lucky too as an association because we've got a couple things going for us. Number one, when we met with Congressman Donalds last fall, he came from the financial services industry. This guy knows what he's doing. He's very smart. When we laid out the issue, he understood it in about 5 seconds. And so it's great to have people like that who understand these issues who can then push them. Also, our state CFO, who was recently appointed by the governor, Blaise Ngoglia, came from the mortgage broker industry. So we've got a guy in at CFO in a statewide position who is a member of the cabinet who came from this industry, and that goes a long way. When we sat down with him 2 months ago,
Yep.
Rick, he knew exactly what we were talking about. He understood limited review, all these issues. He understood them almost instantaneously because of his background. So we're lucky that we have some, the industry has some great people in the association, and we just happen to have some really great allies outside who have been able to help push the agenda for the industry forward and ultimately save customers money in the end.
I mean, and they don't even know the work that's going on behind the scenes, so it's really, really appreciated, and it's moving the needle. It's moving the needle. I mean, some other topics that come to mind are the insurance. I mean, insurance is a big problem, big issue. Is that something that FAMP gets involved with too much, or?
Rick, you want to take that?
So FAMP has been involved in the insurance piece as well. So there was tort reform a few years ago. This is something that we advocated for because there used to be one-way fees. So if you lost, even by $1 on a lawsuit, you owed the other side their attorney's fees as well. That's why there was prolonged litigation in Florida. Florida was the #1 state for litigation in the country. We had more litigation in Florida than all the other states combined. When tort reform came out, that helps the insurance industry because there were lawsuits for a leak that ended up replacing entire roofs and giving $100,000 kitchens to people because it went on forever. So tort reform is an important part of what's going on with the insurance market, and FAMP was a supporter of that bill when it came through.
Yeah, I think another issue that we were instrumental in is the Hometown Heroes. Hometown Heroes, as viewers may or may not know, is down payment assistance for those that are in, where they're firefighters or teachers and stuff, but though they opened that up to pretty much anyone. And before it was only one lender that was able to do that loan, and the mortgage brokers weren't able to access it, yet 60-70% of all the loans are going through mortgage brokers right now. We couldn't access it. So FAMP went and lobbied DeSantis and other legislators, and then were able to move that over to the mortgage brokers, and it was very successful. Now the fight that we have is to try to get that continuously funded every year, and we were trying to get it funded initially at $200 million, and then we ended up at $50 million. So we were that's a battle that we're going to have to continue for next year, and we're going to continue to fight to see if we can get that up to $100 million, because $50 million goes away.
I was going to say, I'm not too familiar with the Hometown Heroes, but I have heard about it, and it's one of those things when you do hear about it, every mortgage broker is broadcasting it because it does feel like a first come, first serve.
Yeah, and that's the things that we do. We see those things that are happening, we attack them, and we feel that if we don't do it, who's going to do it? And that's exactly what with this, what I call my dream team here, is that what we focus our attention on is those issues that not only, we're not there to say, oh, we're going to enrich the mortgage broker or enrich a mortgage lender. Or don't they make enough money already? No, it's not about that. It's about our consumers. It's about the fact that we are helping, and we are really picking the items that do help with affordability. And we've brought that over to the legislators. So you make this change, this and this change, that will change affordability, not some of the other stuff that they're talking. The property taxes is one that will do. That I'm happy that they are discussing that. But a lot of times they talk about other issues that really don't move the needle. The issues that we talk about really do move the needle.
No, I mean, it's amazing to have you guys in there representing, giving a voice to the consumer, to the brokers, letting them know what the important things are. as they build their business, and try to get more people in. I guess looking at 2026, I mean, what are some things that mortgage brokers should look out for, keep an ear out for, stay involved, and kind of stay on the forefront of knowing where legislation is?
Two things, because we're short on time: property taxes. Look to see where that's going to end up, and obviously this 25% rule. That look out for those things, because that's what we're actively working on.
It's amazing. Any last words from you gentlemen down there, Shaw and Rick?
Get involved. That's the important piece. If you got anything out of this, get involved and support FAMP. We are the only association that exclusively represents Florida interests. Every other organization answers to a national association. We don't have a national association that we answer to. We are exclusively Florida-based.
Yeah, and there's an old adage, you know, if you're not at the table, you're on the menu. So FAMP has done a great job at pushing it forward to get the industry and get the association at the table, involved in the major discussions and all the major issues that are going on in not just Tallahassee, but obviously, you know, federally.
No, I mean, and as you mentioned earlier, Orlando, everyone here has full-time jobs and is working. So on behalf of FAMP and the members, thank you guys for taking the time and putting this agenda forward and making sure that we have a seat at the table. Even if we might not know about it, there's someone representing. So for those that are out there, get involved, show up to the events, meet some people, and learn more about what's going on in your community. But thank you guys for your time. I appreciate it.
Thank you.
Thank you, guys.
Okay, and we're back again over here. So, Sammy, talk to me. What do we have now?
All right, we're back to you live from the FAMP Winter Conference down here in Miami, Florida.
FAMP.
FAMP, Florida Association of Mortgage Professionals. We got a great turnout today, a lot of great exhibitors, great vendors, and a lot of networking happening. So if you're not here, don't miss it next time.
You know what that's called before we go to the people? That's called a lot of STLing in this place.
STLing?
Yeah, that's called squeeze the lemon, baby. That's our sign. Squeeze the lemon mindset. That's what's going on here. A lot of squeeze the lemon. That's what it is.
I like it. Well, why don't we introduce yourself real quick, Phil?
Yeah, you got it. Thanks, Sammy. My name is Philip Schultz. I'm with TLS, the loan store. We are full service wholesale lender. We do non-QM and agency business very, very well. We're currently number 4th largest wholesale lender in the country. And we've done that in a very short period of time, in just 2.5 years at the loan store.
I definitely have to have your number on speed dial. Philip.
Yep.
Biggest lender. That's the one we want.
I like it.
Next.
Orlando.
My name is Orlando Diaz. I'm the state president for FAMP. We're the group that puts this show together. This is the Miami chapter show. This is a phenomenal show, and how this show ends up is how the rest of the year ends up for us. And right now, it's looking pretty good.
I love what you do here, brother. I love what you have done here. I mean, this is our first year. Hopefully, it's not going to be our last. You know what I'm saying? And I do want to do shout out because you have been this guy is a strong advocate and a true follower of a Day in Miami. He loves our episodes, and it's guys like him that make this show happen. So thank you, Orlando. Thank you, my brother.
I'm always looking to see who's next.
Oh, well, guess what?
Your
it's gonna
time
be you.
is now.
Yeah.
Here you are.
It's gonna be you. It's gonna be you and Philip.
And when I found out when we finally booked you guys, I was like, this is awesome. This is gonna be great.
We appreciate it. Listen, I think we really take strive in knowing that we're spotlighting a lot of great events that happen in Miami to the regular people out there, because not many people know what's going on.
No.
So I think that we're bringing this voice to all the people out there, and they love it. Before we continue, we were talking off, before we got on live. For the regular people out there, I know that I'm just here now, but what the hell do all these things of QM, non-QM, DBB, PPP? I don't know.
Yeah.
Could we go ahead and do a definition of all this for all all our viewers out there are going to look at the pod and go, okay, what does QM mean? What does this QM mean? So
break
it down.
I'm going to try to simplify it.
Please.
So when the financial crisis hit in 2008, new rules came out, and one of them was the Dodd-Frank Act.
Yes.
And I don't know if you have heard of that.
I do.
But
not many people are happy with that.
Yeah, no. So then that caused basically saying that if you qualify a client under these certain rules, that becomes a qualified mortgage.
Got it. Okay. So that's QM.
QM.
Right.
If you do not, it becomes a non-QM loan.
Okay.
And so what the difference between one or the other is that you have safe harbor. You have safety as a lender to lend money. If you lend a QM loan, chances of you getting sued are very slim.
Okay.
Now, if you go outside of that, you're basically risking your capital, and that's the non-QM world. However, that world has been very successful.
Correct.
And right now, I think the average credit score is in the 700s for people in that.
For non-QM.
For non-QM.
Look at that. Look where I'm at already. Really?
Yeah.
Non-QM.
And before, the rates were very different.
Right.
Like if you got a QM loan, the rates would be at a certain level, and then about 2 or 3 points higher would be a non-QM loan.
Gotcha.
But now that margin has shrunk, so you can get a conventional loan in the low 6s, but you can also get a bank statement loan where we qualify the banks, how much deposits you put into your account,
Makes
and we
sense.
use that as income. That the rates are in the 6s as
Got it.
well.
Got it.
So that's really the difference. It started off with what you can defend in court and what you didn't.
Okay.
But so then, basically, and another way to put it, the non-QM market is what took over the old subprime. Remember that ugly
Yeah,
word?
we just same character, different name.
Yeah,
more or less.
They changed names. But before they check your pulse, and if you had a pulse, they'd give you a loan.
They give you a loan.
Today, it's not the case. They
Right.
fully underwrite these files,
Got it.
and they've sold them, and they perform, and they're great. So that's really where
Now
the
it requires an
terminology.
EKG. It requires a whole bunch of different stuff.
Exactly.
Yeah.
So now you look at guys like him and his non-QM world.
Right.
That market has become big and huge, and it has been playing a major factor in affordability in the state of Florida.
Yeah,
that really simplifies it.
Yeah, and I would add too, just the biggest difference, right, between subprime and non-QM is like you said, credit score. You're talking 700 credit score. These loans perform. That's why it makes this product a lot more attractive for investors looking to invest in this business. And so, you've got hedge funds, you've got insurance companies, you've got all these outside investors that are love the performing, like how these loans perform, and that's why this segment is blowing up the way it is, because again, unlike it was where you needed, could fog a mirror and get a loan, these are way different in terms of qualification. It's alternate document documentation. Bank statements is a big part of it, but it's one of those where it's such a quality product for that right individual, and it's that individual that hasn't been served. Even I would even say some of these borrowers, would overqualify for a subprime loan way back in the day, because again, high credit scores, good reserves, low LTV, a lot of cash in the deal. So
I think that's a great point. I think one thing to keep in mind is for mortgage brokers that are listening out there, this is going to help you close more loans, because the trends in the broader market, people are getting jobs. They're also being solo entrepreneurs. They have side hustles. They have gigs that in a qualified mortgage isn't going to go towards how they're calculating income. The nice thing about the non-QM space, they get a little bit, flexible. You have a side hustle that generates a couple of $1,000s a month. You deserve credit for that, because that could be income that could go towards you qualifying for a house. So as the economy changes to more gigs, more entrepreneurship, small-time businesses, the non-QM place is going to be a place where brokers really need to understand so that they could continue to serve their clients.
And can we just add something, that Miami is the side hustle capital of the world?
Absolutely. and this program is made perfectly. Like, for example, there's so many business owners in
100%.
Florida. Do you think they all claim all the money they really make?
Oh, for the love of God, no.
So then, they're like, you ask them, hey, how much money do you make? I make $1 million. And then you go get their taxes, and they qualify for a pack of gum. And because they don't claim anything. So the bank statement programs actually shows how much revenue is coming in. You take an expense factor out, 20, 30%, and you use that as income, because that's real money that they're generating on a monthly basis.
Right.
That tells you better the health of that company more so than tax returns.
And they shouldn't be penalized for taking advantage of tax deductions, making sure that they're not paying Uncle Sam, and they should still be able to qualify for
That's
a
why they
mortgage.
do the loopholes.
Yeah, that's right. And the spread in the pricing is getting squeezed every day. I mean, the between a QM and a non-QM loan, you're not talking big discrepancies like you had in the past in subprime. It is rates that are maybe a quarter, half, 3/4 higher than what you could get on an agency product. So again, it makes sense for a lot of these borrowers that write off all their income, but you can see the cash flow in the bank statements.
That's what counts.
Absolutely.
That's what
yeah.
counts.
At the end of the
You
day,
know they can pay.
That's right.
Yeah.
You know.
And there's another program in the non-QM market called the DSCR.
So here we go, another one.
Yeah,
Another lingo.
agreement. DSCR, debt service coverage ratio.
Okay, listen to that, guy.
This is important.
Okay, wait, what happened here? Somebody,
Yeah.
I don't know what happened. I don't know what
distracted.
happened. No, I mean,
Got
but for
distracted,
the love of
bro.
God, I mean, your
What's
viewers
going on?
can't see anything right now. We can't,
This is so Miami, right?
I don't know, but
Miami.
I don't know what.
So Miami.
This is so Miami.
I think I'm choking. I think I need a CPR.
I don't know, but I didn't know we were close to the beach.
Let's focus, guys.
Go ahead,
Let's
sorry.
focus. So the DSCR program is basically saying that if you're going to buy, this is important if anybody wants to get into buying investment properties. So what they're basically saying is if you buy a property that the rent of that property coming in covers your mortgage, that's all you need to qualify.
I mean, isn't that everybody's, all those investors out there, that are looking for properties? I mean, at the end of the day, I always say I come from old school. My dad, Cuban, the whole mentality. Hey, you pay your house, you don't rent. We can argue this to the other day also with this whole renting or owning situation. But then you have the people with investment properties that say, as long as it covers everything, you're good because you're making money on the value of that property.
It's credit score driven, so if the person has a history of paying before that, the chances of them paying that loan are great. But if they have revenue coming in to cover that debt, then that's really all they do. Now the pricing on that is slightly a little bit higher, but it's the difference of going that or trying to go through a bank and spend 45, 60 days trying to get that and looking for every reason to deny your loan. These are simple, clear-cut loans that perform. And that's the important thing. They're performing. So the reason why there's so many non-QM lenders here giving that program is because it keeps performing.
Absolutely.
So that's another great non-QM product.
And it's an easy underwrite. I mean, it's cut and dry, black and white. It either covers it or it doesn't, and that's why.
This is why I always say, Philip, it's so important for people to have their mortgage brokers.
That's right.
Because, some people try, everybody's trying to save money. So I was listening today, and I don't remember the name. I was watching Fox Business today in the morning, and they were talking about this new AI thing for housing. Not necessarily to cut out the realtor, but to make it easier. Now we know the AI situation's here. It's going to stay here. It's just going to even get worse. How do you guys stay up to par with everything that's going on with AI? Where have you seen AI being implemented now in this world?
I think one of the ways is the way you underwrite a file now. The AI is coming in and they're being added for underwriting purposes. So you don't have to have a physical person looking at every document that comes in. It kind of reads your bank statements. It reads your pay stubs. So now you don't have to have a physical person. I mean, that gets into a whole broader conversation of whether even us will get wiped out, because it's going to get to a point that it's going to know everything, and somebody's going to get approved in 5 minutes and get for a loan. That may be 2, 3, 4 years out. Right. I mean, it is affecting white-collar jobs. And but what we're doing is we're educating. We had educational seminars on AI and how it's affecting it. Usually, even finding the clients. AI is helping companies find clients as well through marketing efforts. You can go ChatGPT and ask it, I need a marketing campaign to capture first-time home buyers, and then it produces for you, sets the emails, and gets everything ready for you. I mean, how is that going to affect all white-collar jobs in the future? I don't know, but it's not looking good.
Well, but we still need the banks, and we still need the lenders, right?
You still need the money.
You still need money because AI cannot produce the money for you.
They can't produce
I mean, they could go ahead and tell you, but so. Philip, is your institution,
embracing AI, absolutely,
which is important?
And to his point as well, from an underwriting perspective, it makes us more efficient. It makes us more, our underwriters and AI does the majority of the work, but then our our underwriters second set of eyes on it just to bless it kind of thing. But that increases efficiency for those underwriters that were doing 2 to 3 loans a day are now doing 8 to 10 to 12 loans a day. And so that, from a cost perspective, from a lender perspective, that means we can, because of that technology, it makes us more efficient. We don't have to hire additional people that has, that brings down your expense side of the house, and really, we're able to have a sharp price, in the market for there. I think too, AI from that perspective comes out. We have tools that loan officers and originators can use that, to your point, you just put in the scenario and it'll give you the answer based on our guidelines.
Right.
And so that makes originators a lot more efficient from their standpoint, because they're not waiting for a call back from an account executive or an underwriter or anything like that. Hey, is this deal going to work? Is it not going to work? So that there's some efficiency gain there as well.
I mean, it's a lot to digest. You're talking about all these acronyms, the DSCR, QM, non-QM, conventional. I think it's very important that the brokers that are listening and tuning in, that are been used to working on these conventional space and understand it inside and out, they need to get with the times. They need to understand that, hey,
there's brand new tools out there
and programs.
Yeah,
and I think
and
that's how Philip became the 4th largest wholesaler for non-QM. There's resources out there for these brokers to expand on their revenue streams and help grow their business. And I think it's very important. That's why we host these events and have people come here to learn more, because it is overwhelming, but it starts with a good account executive. It starts with a hungry mortgage broker who wants to learn more and provide more for their clients.
Yeah, absolutely, and I think to the degree that your the originators that are on the fence about it, it's not going away.
It's only growing. It's only growing.
This is a segment of the market that,
gotta embrace it.
Got to embrace it. You got to get on the bandwagon. It's really, but it comes down to education.
Because for clarity on that, before, you would have a mortgage broker would have 10 clients, and 9 of them would go to Fannie Mae, Freddie Mac, FHA.
Right. Okay.
The traditional loans.
Traditional route. Yeah.
And 1 loan would be a non-QM loan. Right now, it's 50-60% of their product mix. It's huge. Sometimes it's just easier to put somebody in a bank statement program than it is to go through a conventional.
Correct.
And that should be probably in their line of questioning. When you're filling out a 1003 and you're kind of going through it and asking your borrower questions, you need to be able, as a mortgage broker, to adapt a little bit. All right, hey, they might not have the job, but they're representing that they have this much liquidity. How did you get that liquidity? Then you find out they might have a side business that is raking in money, and they could simply get another non-conventional mortgage. Then get to where they need to go in a different route.
Yeah, and one thing that folks don't realize, and your comment, jumbo loans, right? It's typically agency product, or not agency product, but a secondary product. But you had tax returns to qualify, all the things, right? Typically, banks are the ones that kind of own that market. Our mortgage brokers, our originators, in the wholesale space, they had a hard time competing with the big banks because the big banks wanted their assets, right? But they made it hard to qualify because of all the documentation. We are seeing, and we offer a jumbo product, but as we evolved, with our non-QM product and bank statement product, we're actually getting less documentation. We'll go bank statement route on that. 4 years ago, they'd have come in asking for a jumbo loan.
Yeah.
They come in and ask for a jumbo loan, and we say, hey, well, here's jumbo pricing, here's non-QM pricing. We're going to make this easier for you. I'm going to get 12 months bank statements, and this thing's going to fly through, and you're not going to have the hiccups. Not to mention, those non-QM prices compete with the big banks. So those deals that you were losing before because the bank wanted their assets, they go down the jumbo route. Our partners, our originators, brokers out there are able to do jumbo loans in the non-QM space for really attractive pricing.
I mean, it's very important. What's a message that some of these brokers should hear to get more involved and to kind of broaden their horizons on products that they're offering?
Education.
Yeah.
I think that's the key with anything, right? Educate yourself. You're, mortgage professionals. Act like a mortgage professional. Do your homework. Get in.
Right, you mean we have to read and study and learn?
Right.
A guideline? I can't just give it to you and you put it for me.
Back to AI.
That's why we hire the mortgage brokers.
That's right. AI makes a lot of that learning a lot easier than it was, for sure. But yeah, I think education has to be the biggest part of that. It's just really understanding the product.
Yeah, I think that also on top of something that he mentioned, a bank is a huge bureaucracy that has a lot of regulation.
That's what I was going to tell you.
These are privately owned companies that that are able to be more nimble. They're able to make decisions on the spot, even if it doesn't meet certain criteria. They give exceptions, as opposed to a bank. It's clear cut. Nobody wants to make a decision, and it's going to take you 45, 60 days. It is common to close a loan in 13, 14, 15 days.
That's right. I think that's a very important part, the exceptions. So I mean, you know, hey, it might have a couple green flags, but maybe there's a yellow flag or two. What's a couple exceptions that we could get?
To add on that, really quick, do banks don't see this? Or
I don't care.
They don't want to be in the business.
They don't want to be in that business.
I would already say this has been going on for so many years. I mean, the fact of like, so many people always say, I don't want to deal with a bank, bro. That's why I prefer saying, no, I prefer going with a mortgage broker. Oh, but they make a little bit, I don't care. I'll pay that little thing. I don't want to go through the headache of a bank. You would think that banks already have, you know, I know I'm going to get some flack from people that work in banks. Oh, what are you talking about? Well, but listen, it's the truth.
The truth.
I mean, if you really
perception is reality.
If you go outside there now and we start doing a survey of how many people have had bad experiences with their banks versus saying, I got my house thanks to a mortgage broker and I went through a private lender. I mean, the banks just, I don't know, they just give you so much hassle.
And I speak to a lot of bank presidents and go to luncheons together, and we speak about this exact point. And I asked them that, why isn't it you guys make a change? They don't want it.
They don't want it.
They don't want it. They want to do the vanilla loan for the clear client, and what they really care about is deposits. How much you deposit in the bank, because the amount of money you deposit in the bank is the amount of money they're allowed to lend out. So they don't really care. If it doesn't fall in their box, go. And that's fine for us. Private capital has stepped up in the residential.
100%.
Not only in the residential, but also in the commercial.
Sure.
Private capital has
investment
stepped in.
properties that everybody wants to do. I mean, you would think by this time that the banks would say, I get it. You know what I'm saying? But listen, we don't want to promote. That's what I was going to say. We're not promoting. Keep doing what you're doing.
They're doing a good job.
We're happy. We're happy with that.
We like our money markets.
That's right. So I guess one of my last questions would be to Philip. We just started the year. How's it going?
Amazing. Yeah. We it's not to sound cliche, but the beginning of the year started in December. If you're not building, if you're not preparing for the new year, if you're waiting till January 1st to start working out and you go to the gym for the first week or two and then, you can't get on any of the machines, and then by the 15th, by today, you're walking in and there's nobody in the parking lot, right? So all those empty promises on January 1 is it's just like that. If you're not preparing going into the new year in December, you're missing the boat.
No, and I think as a mortgage broker, you need to know that there's a lot of resources out there. And you have teams and lenders like the loan store, like mortgage brokers around here that are here to help you. And then you got to lean into that because there's so many resources. You're not alone. You got to build a team and they will help you close more deals. You focus on what you're good at, bringing in business. Get better at pre-qualifying them. Understand what the potential red flags are. And then the rest, no one gets paid until a deal closes anyway.
That's right.
I guess another one that I know a lot of people out there are thinking about. So I like to ask those questions that I know my viewers are thinking about. I'm not getting into a political, I always say we're non-political here, but does the regulations affect the industry? Like when you have different administrations, does it make it worse or could it make it easier? You know what I'm saying?
Yeah.
Because a lot of
there's no doubt.
There's different, and again, it does. I'm not getting into that. Yeah. The fact that if you're a Democrat or Republican, I don't care. Yeah. It just depends on regulations. I know that when there's a lot of red tape, because when there's people that can understand it, they say, you know what, you need to eliminate some of this red tape so people can get their first home, in the sense of the banks. So I guess that's my question. Yeah. Does that really, depending on different administrations, how they think and how they view things, does it affect, Philip and your situation?
Especially because I handle government affairs. When a change of administration happens, and if it switches party, it affects how we lobby. There's no doubt whether you like the current administration or not, the current administration is pro or less regulations.
Correct. Right.
There's no doubt about it. We feel that there's an environment right now in the White House and in Congress that is looking to lower regulations and make it easier to do business.
And help out maybe those first-time home buyers?
Yep. Yes, absolutely.
You know what I'm saying? Maybe even help out those people that have been dabbling to see if I want to get into, investment in real estate? You know, does it make it easier?
Affordability.
Affordability. There you go.
That's the biggest thing, right?
Correct.
It's just doing those things as the administration to make things easier, to get more people in homes, to get to get the economy back on track.
So I think it's safe to say for any of those viewers out there, they're going to be looking now to buy their first home. You got about 3 years?
3 years. You got to get.
You got about 3 years to go and get a good deal. Yeah. You know what I'm saying? Maybe. I mean.
Yeah, and I will say was last thing. I know we're short on time, but right now everybody mobilizes whether the rates are starting to go down. Now we're seeing more business because the rates are starting to go down.
Right.
But the right time to buy is now, before it starts going down even lower.
Right.
Because what happens when the rates go down? The prices of the houses
that's what
go
Sammy.
up.
We were talking about that earlier. But I challenge that in the sense of saying I know the prices go higher, but I think people are okay with the fact of I'll pay it, but I know I'm paying a less amount of money.
There's the marry the house,
the home,
date the rate.
There you go. That's what I'm saying. Because at the end of the day, the person had said, "Oh, but I can afford that." You know, I can get into that house, but I can afford $4,000. I can't get I can't afford $7,000. So I think people with the fact that they can do it, I think it's great. Well, listen. This has been fascinating to me, and this is great. I'm glad we were able to clear up the lingo of the QM and the whole thing.
Are you ready for your test?
I think I'm ready for the test. Worst case scenario, I'm just gonna chat GPT that damn thing. Anyway, thank you so much for all this. I mean, this is great. I think that we gave great information to people out there, and this is what our viewers at Miami are looking for.
Awesome.
You know what I'm saying?
Orlando, Philip, if people wanted to find you, what's the best way to find you?
TheLoneStore.com is
go.
how to get in touch with us, and we can help you out.
Yeah, you can. Best thing is Instagram at ODS314. You can reach out to me there. You can find everything that we do.
When you see Manny asking for loans, that's me. Okay.
I got a job for you, man. You can work for me any day.
No, thank you guys.
Thank you guys so much,
awesome.
and we'll continue. Stay tuned.
Welcome to a Day in Miami podcast. We're here at the FAMP convention at the Lowe's in Miami Beach. Sammy, outside of the happy hour that we're about to hit up.
We're working hard towards it.
You know what I'm talking about? What's the most exciting thing you've seen out here at the convention so far?
It's been a great turnout. I think we had over 1,800 people register. We have almost 1,000 people here.
1,800?
Registered, 1,000 here. We have over 85, 90 exhibitors, some of the best vendors, lenders, mortgage brokers, legislation, title in the country. So if you're not here, you really missed out, but make sure you check it out for next year. We'll be back. But today we're joined by some of the best of the best. We got Deep Haven. We have Tom and Leslie here to talk a little bit about some non-conforming mortgages, some non-QM, I should say, and how we could help educate our brokers to bring more business, grow their pipeline, and get deals done. So without further ado, you want to start us off with an introduction?
Yeah, sure. Tom Davis here, Chief Sales Officer at Deep Haven. Deep Haven is a pioneer in the non-QM space. We were the folks who brought liquidity into the non-agency space, first to securitize non-agency loans or non-QM loans. We're one of the largest investors in the space, and we focus on non-QM, equity products, second liens, as well as RTL, residential transition loans, which are your fix and flip, ground up construction, and bridge loans.
That's amazing. And Leslie?
So Leslie Rudd. I'm on Tom's team, wholesale executive, account executive here in the South Florida area. So kind of just, serve the local market, South Florida market. Again, introducing non-agency loans. And all the different options you can close those loans that don't close agency.
That's fair. I mean, and with all the products that you're offering, all the brokers that you work with, what are some of the low-hanging fruit that these mortgage brokers are missing out on by not learning, not taking the next step of engaging with an account executive, rolling their sleeves up and learning a little bit more?
Yeah, I would say if you're not doing non-agency or non-QM, it's a big mistake. In early 2025, this space was projected to hit about $70 billion. We finished the year at $120 billion. Billion, that's right. And so that's just a segment in the non-agency space. So that's $120 billion. In 2026, we're forecasting that space to hit about $150 to $108 billion, 180. So that's another about a 50% increase. So non-QM's $180 billion, let's call it, in 2026. Then you had an equity, which I think is a generational opportunity. That we expect to hit about 120 billion in fundings in 2026. So now you're at, like, let's call it 300 billion. And when you add in RTL, which is fix and flip and bridge, in 2025, 1 out of every 3 deals was an investor transaction. It's the highest on record since it's ever been recorded. So 30% of transactions were investor deals. If you're a mortgage broker or you're an originator, you better have a full suite of non-QM, which includes like the DSCR, a second lien, a fix and flip and bridge. So you could offer investors end-to-end solutions in the market. And once again, if you don't have non-agency or you're not focused in the space, you're missing out on a $400 billion market in 2026, which is 20% of the overall origination market of a $2 trillion market. So the folks who do non-QM and focus in non-QM, they're thriving in a challenging market. They're the ones that are taking share. You know what I love about Miami is very entrepreneurial spirited town down here. There's a lot of folks that come from all over the world that come live down here. It's just, you feel the energy. People are self-employed. If you look at, in the United States, this is an interesting fact, of the 10 cities in the United States with the highest self-employment concentration, in the United States, 6 are in the state of Florida. Wow. And the number 1 city with the highest self-employment concentration is Hialeah.
Wow.
Yeah, bro.
Hialeah, baby.
Hialeah, yeah. They hustle. They got multiple jobs, side hustles.
La ciudad que cobresa.
Yeah,
no more fango y factoría.
No, the Cuban Americans down here, they grind. They came here for an opportunity. Yeah. I'm Cuban myself, and I think, they come here. There's plenty of opportunity. Either you take it or someone takes it for you, and you can see it in the brokers and the energy here. It's just unbelievable.
Those numbers you mentioned, those are nationwide or in this market down here?
Which one? The
300 billion.
No, the 400 billion is nationwide. But in non-QM or non-agency, South Florida is like one of the top markets outside of California. Non-QM dominates. Like if you go out to this show, this is a non-QM show. All the vendors out here are non-QM providers, right? That's where the production's being done. Look, in the United States, you have 18 million self-employed people that account for over 30 million people, or 30 million businesses. Or excuse me, there's 18 million businesses, right, in the United States. And then on the investor side, there's 19 million investment properties that account for 49.5 million doors. So there's actually more self-employed people. There's actually more investors than veterans. So
you're telling me if you don't have a W-2, you could still get a mortgage? Is that
absolutely, yeah. You
100%.
qualify. Yeah, there's multiple ways. You could qualify. This is our industry expert in South Florida, Leslie Rudd. Leslie, tell them how you qualify on non-QM. Multiple ways to qualify.
So multiple ways, and you mentioned W-2, and I love that you said that, because if there's one takeaway that an LO can take from this is know your borrower inside and out, okay? So bank statement loans for self-employed borrowers. So if you got obviously self-employed borrower is not W-2, he owns his own business, okay? Guy shopping for a house, wants to finally reap the rewards of all the hard work he's done, really wants to buy that trophy home, for the family, finally. They find a beautiful home, $2.5, $3 million, $5 million home. They're super excited. They're stoked. They want to put an offer. They meet with their broker, the LO, and they said, okay, well, bring me your tax returns. That brings his tax returns and says, man, with that income, maybe I can get a $500,000 home.
Yeah.
Now, the old LO would say, sorry, that's all I got for you. The new LO now, because of the emergence of non-QM and non-agency, how it's exploded, almost everybody knows now the power of the non-QM space. Sure. So a good LO now knows, you know what? Sounds like you really run a successful business. Everything you're telling me, your credit profile is fantastic. I mean, do me a favor. Forget about those tax returns. Bring me your business bank statements. Let me take a look at that. We're looking at the top line. Your top line deposit totals for us is your revenue. Okay. Yep. Obviously, every business has certain expenses, and we'll apply an expense ratio, a reasonable expense ratio, 99.9 out of 100. You get way more bang for your buck. with those business bank statements. That
Yeah.
guess what? That guy can now buy that $5 million home.
Yeah, look-
bank statement borrows,
Yep.
self-employed, hands down, number one.
In the self-employed person, right? Very entrepreneurial spirited. What do? They go to their CPA or their accountant, and what do?
Maximize deductions.
They leverage the CPA to optimize their tax strategy, right? And so they have a lot of write-offs, right? So what we do is we look at the bank statements and you take a forensic view into the cash flow of the business or the person. So you're looking at the deposits and the expenses, and you actually have a better view than a W-2 borrower because you see everything coming in and out, right? And so it's another way to qualify the borrower from an income standpoint. And what's really interesting is this subset of borrowers, well-heeled, usually higher net worth borrower, these borrowers, they when you look at the profile of the transactions, that the loans that are being originated in non-QM bank statement on a national basis, you're looking at an LTV of about like 66%. And so there's a lot of embedded equity in the deal. DTIs are in the low 30s and FICOs are 740. Yeah. So you have performance, you're showing the income, solving for the ability to repay, and the borrower that has 35% skin in the game, they're not going to walk away. Versus a W-2 borrower that's pushing high LTV, lower FICO, those loans tend to default more than non-QM because you have so much embedded equity. If I'm buying a house and I'm putting 35% down, I'm going to sell that house. I'm not foreclosing. I'm going to get my money back, right?
But you could get a little bit higher leverage with the non-QM side.
You can. I mean, you could do deals up to 85, 90 LTV. Yeah. But what I'm telling you, what's being done, right? The 90 LTV on the non-QM, like that's a 4-leaf clover. Like the guy that's buying, like that's taking advantage of the bank statement, the vast majority is under 70 LTV.
That's good to know.
Hey guys, and for some, for the people out there that only know this on the surface level, like me.
Yeah.
How do you calculate debt to income?
Yeah. So basically, you just take deposits minus expenses, right? And then you use an expense factor. So let's say our average is 50%. So let's say you're showing 20 grand in income. Then we would use a 50%, depending on your deposits, right? We would use a 50% expense factor, so you could use 10,000 for income.
Right.
Got it.
But
right?
that's why it's important to have a good account executive, though, Marcos, because those questions are very, very key, and that will drive the size of the house, the loan amount, what they could qualify for, because at the end of the day, these investors need to understand how are you going to repay this loan, and that's how they'll do it. Yeah. The account executives at Deep Haven, excellent.
Yes, so being an account executive at Deep Haven, right, I think we're known for our expertise, knowledge, and focus, right? We, just like if you're a financial planner, a really good attorney, or a surgeon, the reason you go to, the reason you're going to pick a surgeon or CPA or financial planner, you want to go with someone that has been doing it in a while, that has expertise that could help you, guide you through structuring of the deal and making sure that when you structure it, it's going to close. If you don't have expertise and focus, then that deal more than likely is not going to work, right? Because they're not good at structuring it. So having someone that has expertise, knowledge, and focus is what sets you apart. And I think for loan officers, the loan officers that really embrace and adopt non-QM, whether it's bank statement, DSCR, profit and loss, asset utilization, whether it's 5 to 9, whether it's equity products. Equity right now, today we're at 35 trillion in equity in the United States. It's the highest it's ever been. Then we also have debt. Consumer debt is at a high of like 5 trillion. Credit card, auto, student loans, all-time highs. And then the average age of a home in the United States is about 40 to 50 years old. So, so what's happening is, about 85% of Americans have a mortgage. They're under 5%, and it doesn't make sense for them to refi cash out. So what we're seeing is people tap into their equity, keep that 3% mortgage because it's cheap money. Like if I could borrow $100 million today, I'd borrow $100 million at 3 all day long. I'd borrow $1 billion because I would invest it at higher, right? So if I have a 3%, $500,000 mortgage, and I need $50,000 to consolidate my debt, or I need $50,000 to do that, another $75,000 to do a home renovation because the average age of a home is 40 to 50 years old. We're seeing people tap into their equity and doing a second lien. So I personally think...
And Deep Haven could help with the second liens?
Yeah, we have the most robust product offering in second liens in the market, hands down. And so we offer a closed-end second, which full doc, alternative docs to qualify, so bank statement, P&L. I have a DSCR for investment properties. And then also we have our own digital HELOC too. So we have a full suite of equity products. And look, for all the originators in this space, it's a huge mistake if you're not offering equity products to your borrowers, because every single loan that they're closing today, that loan's being sold to the servicer. And you know what the servicer is doing? They're soliciting that borrower for their second lien. And if that servicer owns the first and the second, when it's time to do the refi cash out, the servicer has an 85% chance.
Wait, but so time out. You're telling me that these homeowners that have been in Southeast Florida that have bought homes in 2010, 2000, that have doubled, tripled, even quadrupled in price, they have their mortgage from 20 years ago, 15 years ago, or 10 years ago at that 5. And they have that equity. They could tap into that equity, still have the same mortgage they have at the great rate, low price, and still make progress on bettering their lives without having to do too much.
Well, I mean,
that's amazing.
Yeah, it's amazing. Not only can they renovate their home, they could consolidate their debt. They could use the equity to fund their business. They could use, once again, I talked
Send
about
the kids
this.
to school. I mean, whatever you need that money
for.
down
here are not cheap.
There's 19 million investment properties in the United States that account for 49.5 million units. Investors, you know what they want? They want cash flow. So if someone has an investment property at 3% and they cash out to buy another investment property, like, it doesn't make sense to give up a 3% rate. I'd rather take out $200,000 equity, use $200,000 deposits, go buy 2 more deals. So if you don't stay in front of your borrowers and don't engage with them and don't offer these products as an originator, what the problem is, you're going to lose that borrower today, and then in the future, when it's time to do the refi cash out, the servicer is taking your borrower, so you lost 2 deals.
Right? Well, I mean, it's very important for those brokers out there. You got to know these products. You got if you have to listen to what your borrower and your client want, and you have to be able to help them get what they need. Otherwise, they're going to go to someone else.
Yeah, and I'll talk about, here's another thing too. So in the United States, as you guys know, we've had this massive migration over the last 15 years. Over 40 million people in the United States were not born here. And I think, having people from other countries, I was not born here, but having people from other countries is what makes us the United States, right? And so very entrepreneurial people, they come here for opportunity. So saying all of that, those people, when they come here, they want to buy investment properties, and we've seen folks that come here leverage our products. Foreign nationals leverage our products to buy investment properties. And so we've had this massive migration, and the home builders haven't been able to build new homes as fast as the demand that because of all this migration. And now what we're seeing is like a seller strike in the market. Everyone that has rates under 5%, and they're in the 3s, they can't afford to trade into a bigger home at a higher note rate, so they're staying in their home. So there's this locked-in effect. But we have a undersupply of homes in the United States of 5 million homes in the United States. So originators should be embracing solutions or products to help builders build new homes, to help property investors renovate new homes and bring new inventory into the market. And so that's another opportunity. You could offer financing. We have a product that we could do ground up construction up to 15 million. And also,
I was just going to go there. So we took care of now talking about the homeowner. Homeowners, people that live in their own home, foreign nationals, other DSCR. Shifting gears a little bit to the investor side, you just brought up the ground up construction. I mean, this undersupply of homes, strong demand. How can we help these builders build more homes so that they can make a profit and help, contribute to the solution?
Well, if I'm an originator myself, I'm working with every builder, developer, and real estate investor in South Florida. And I'm saying, hey, I can help you do more deals next year because I have strong liquidity, reliable liquidity, and I could help you build new inventory or rehab existing inventory and bring it into the market. Now, if you could help the builder, the real estate investor, and you could help them finance those projects, you're getting that deal to finance the project for the investor, right? When that property's done, then I'm going to do the takeout for the consumer, or I'm going to do the takeout loan for the investor. So now I'm getting 2 deals for that for that investor. And the average investor in the United States, they do 5 to 10 transactions. The average investor, if a consumer might buy a house every five years. So if I want to grow my business, I'm focusing on 30% of the market, and which are moving the transactions and has repeat business, right? So saying all of that, with all these products, I know time's running short. I'm going to give a takeaway for all the loan officers on how to grow their business in 2026. So here's what I would say. The top 5% of realtors in the United States, the top 5% of the realtors control 95% of the listings. They're the ones that are moving weight in real estate.
Top 5?
Yeah, 5% of realtor teams, they're the ones that have 90% of the listings. The bottom 95% of realtors only have 10% of listings. So I would tell the loan officers at this show and across the United States, don't call on realtors that don't have deals. Don't waste your time. Call on the top 5% who have the transactions and become a product knowledge expert with non-QM, second liens, investor transactions, and become an industry expert and leverage those products to tap into the people who are moving weight in real estate. That's how you're going to grow your business. Work with people who are doing deals, become a product knowledge expert in your backyard, and be the first call for these alternative mortgage solutions. And that's what we do at Deep Haven. And I would connect with Leslie. He's our industry expert down in South Florida. He's the one who's going to help you make more money in 2026.
Leslie, what's the best way they can get in touch with you?
305-725-1247, deephavenmortgage.com. Look us up. Yeah.
It sounds like, if you're not involved in this is something you need to get involved in. Learn, understand your products. You're going to come to these top producing offices. You got to know what you're talking about.
Absolutely.
It starts with knowledge. It starts with time investing. Get in touch with the account executive. Learn a little bit more and start making more transactions come to fruition.
Absolutely. Thanks for having us, man.
Hey,
I appreciate it, Sammy.
Thank you.
Yeah. Thanks, guys.
Thank you, guys.
Yeah.
Welcome back. We are here starting another panel for the A Day in Miami podcast here at the FAMP conference in Miami. Closing it out today on the podcast, we have two amazing guests, and we have Sammy, their co-host. Aaron, I'm going to hand it over to you and let you introduce yourself.
Yeah, absolutely. Just thrilled to be here. I'm Aaron Samples. I'm the Chief Operating Officer at Logan Finance. And I've brought Paul Jones with me. I'll hand it over to Paul.
Sure thing. Paul Jones, Senior Vice President of Business Development for Logan Finance.
Perfect. Well, thank you guys for being here today. A lot of action coming from out of town. You're in Miami, probably one of the largest non-QM spaces in the country. So many self-employed people, so many hustlers down here that might not necessarily qualify for these traditional W-2 loans. And Logan Finance is one of, if not the largest, non-QM loan provider in the country. And as the operating officer, I'm sure you've seen a lot of growth the past couple of years, if not double-digit, maybe doubling each year the past couple of years.
Yeah, it's been actually incredible. We've just seen almost 2x growth over the last several years. You're absolutely correct. I think that Florida in general, certainly down here in South Florida, is really a hotbed for non-QM, but we have markets all over the nation now that have really turned into non-QM markets.
That's fair. And on your end, what do you like to focus on?
So my biggest thing with Logan and non-QM in general is just focusing on the training, helping people see the vision and what they can use these products for, how to reach the real non-QM borrower instead of doing some of that accidental non-QM. The key to growing in non-QM today is education, just understanding the products at a deeper level and not just throwing things against the wall to see what sticks.
No, and you can't afford that. As a loan originator, if you're trying to make it in this market as a loan originator, you really need to know what options you have available. When you're speaking with the borrower, you need to double click on some questions, understand where their income is coming from, what side hustles they're working on, how their bank statement looks, how their liquidity, because these kinds of products, there is a space for them. You can be a homeowner and not be on a W-2. So I think that's...
Well, it's no longer a space. It's its own industry in its own right almost, right? The space, non-QM space, has grown to be over 50% of the borrowers, and here in Miami it's probably 99.9% of the borrowers because it's so hard to qualify with a W-2 job at today's home prices, right? So, and for those that don't know what's going on in the background here, we got lifeguards shirtless, we got a party, we got whistles going on. It is absolutely electric here. We got two boys from Philly just taking in the Miami.
No, we had Dallas. We had
Dallas and
normally
Philly.
we're rivals,
Yes.
but
Okay.
we know how to work together.
We're working together today, and they are taking in the Miami Heat, which
There
we
we
got a
go.
cold front. You guys brought it down with you a little bit.
We'll take it.
But
We'll take it.
you guys probably travel the country talking to mortgage brokers. What was your purview of today? What did you see in the room today, and what excites you here at the FAMP conference?
Well, for me, look, I see a real acceptance in the non-QM space. If you think about the space in general, we got about 10 or 12 years of really tenure in terms of non-QM. So you have a liquidity market that buys this product that's gotten really comfortable with the asset, whereas in the beginning you used to see liquidity come in and come out of the market. Now you have probably the best liquidity that I've ever seen in a decade in this space. So the adoption of loan officers and brokers coming to non-QM has been immense over the last 24 months, and I think you can see the excitement here in this show.
It might as well be a non-QM show out here. I mean, at this point, with more liquidity coming in, that means better pricing for your client as a broker, better pricing for your borrower, better rates, less expenses, and more ability to get through some exceptions that might trip up along the way, knowing that the other side, the investor that's going to be carrying that mortgage, is comfortable with the asset, comfortable with the borrower.
No question about it. Let me throw this stat out there. Would you believe if I told you that only 10% of LOs or brokers that have NMLS licenses have done a non-QM loan?
How do we fix that, Aaron? They're sleeping on the wheel. I mean, this is a double digit. You said 2x. I thought it was double. It's 2x year over year. It sounds like it might be another 2x in 2025.
And you have only 10% of LOs doing it.
How do we educate them? What do they need to know?
Paul, that's what Paul told you. I think is it's about education. There's LOs out there that still have a subprime, or they have some connotation in their mind that's negative.
Yeah.
And you got to put that aside. It is not that business by any stretch. If I told you the stats of our portfolio, you're talking about a 760 FICO borrower with a LTV below 70, right? Take a look at an FHA portfolio and tell me, compare those two.
Oh yeah, they're
it's not even
super
close.
leveraged, 97% LTV, 620 credit scores.
Right, so if you're an LO out there and you're uncomfortable with it, you need to get comfortable with it. You need to find somebody like Paul's organization with us. I think we have the best business development group in the country. They will go out, they'll sit down, they will teach you how to do non-QM, teach you the products. More importantly, they'll teach you where to fish. It doesn't do any good to go fish someplace where there's no fish. Where to go find these products? Where are these opportunities? And we invest a lot of capital and time and resources into that for our brokers and our MLOs.
Yeah, if you take a look at your DSCR product, maybe you just need to focus on DSCR. You don't necessarily have to understand everything right away. But if you start in that market where there's an investor, that investor probably does have other income streams that will also be served by non-QM or vice versa. So a lot of times people try to just jump in and learn it all at once. The way we approach it is more strategically taking a look at individual pieces of the products and teaching them the basics all the way out into what Aaron referred to as where to find that business. Because if you're expecting to learn it just in one 15-minute session, you're not going to learn it. So we sit down and strategize with the leadership at our partners and figure out what they want out of it, what's the long-term plan, and then we execute that plan and we follow through with a lot of other materials to help them stay aware and educated.
I think long-term, you hit the head on the nail. This is not going anywhere, not going away anytime soon. And I feel like the sooner you get aware of it and learn about it, little by little, you'll become a product expert in it and be able to help your clients out better.
That's right. I think if you look at the new non-QM market, we don't get the same data that you get in the Fannie, Freddie, and the conventional markets. I think anybody that you talk to thinks that non-QM is about 10% of the overall mortgage market in terms of size. There's some forecast out there that it could be as big as 15 or north of 15% in the next 3 to 5 years. That's a major piece in the market. And just about any economist you talk to right now, whether they're with the agencies or MBA or our friends on Wall Street, we see a market size growing overall, right? I think there's two growth trajectories to focus on. I think mortgage markets are growing overall. If we look at 26 versus 25, everybody's projecting a larger market, so there's more opportunity. And then there's the market share of non-QM within the overall market, and we're seeing that grow as well. So again, if you're not doing it, you're just not in the market, in my view.
And Aaron, you've talked about the expansion of the space. Paul, you talked about the education, the liquidity coming into the market. What do you think is really a driving force? Has it been a combination of brokers getting to know the product more? Are brokers taking over more of the traditional mortgage lending market? Why is this space just catching fire so quickly?
Well, in my view, the brokers have adopted non-QM way better, way faster than what we see the big retail shops doing. And I think that's because they had to. I think when you look at most shops today, if you look at their P&Ls and their pipelines and balance sheets, they're not growing with conventional loans. So brokers did it because they had to, and now they've really cornered that market, and I think we see some of the big retail folks trying to catch up in terms of the non-QM and alternative lending space.
And I think Paul said it perfectly. My wife is a broker. When she started in a retail shop 8 years ago, she didn't touch non-QM. She learned the first product when she became a broker. Now she probably does 10, 11 non-QM type products, learning them one at a time, right?
Yep.
And I think somebody said earlier that you could look at two exact same borrowers and they're going to go through a different loan process each time.
Absolutely.
Because even though it's the same product, not every deal is the same.
No, I think crawl, walk, run. Crawl, walk, run. Learn it little by little. What were you going to say, Aaron?
Well, I think here's another stat I'll throw at you, though. Look, I look at the market every single morning, 6:30 a.m. in the morning with my team. I'm looking at the overall market size, locks coming in, where they're coming at, in which buckets, products, FICOs, LTVs, looking how we index against the market, pretty sophisticated view on it. If you only did bank statement and DSCR, you're covering about 89% of the non-QM market.
There you go.
So if you were a broker...
So just with those two products,
Yeah.
they could cover 89% of the non-QM
if,
market.
If you're a broker and you just focus on DSCR and bank statement, and there's some iterations within those, right? You're nearly covering 90% of the overall non-QM market, and I look at it every morning.
Well, let's double click on, there's only two that we're going to cover today, so let's double click. So on the DSCR, when I hear DSCR, I'm thinking, debt service coverage, but my head just goes straight to investment property. Is that the case?
It's not always the case, but that's certainly what we're seeing today. And I think, look, I'm an investor in real estate, and candidly, the big tax bill this year has made it almost criminal not to go invest in real estate. And we have just seen that business purpose, investment property, DSCR space just explode. We used to probably out-index DSCR with our DTI products, our bank statement products. I think last month DSCR was over our DTI products.
And that bill is only going to further DSCR because of the depreciation and the benefits from it. It only pushes those borrowers back into non-QM for the next property, right?
100% bonus depreciation. You're begging me to go buy a property, then you're giving me money back to go buy another one.
Exactly.
But an agency, they can't do that.
Can't do that.
No such thing. Right.
I like that.
I mean, powerful tool.
I like that. So that takes care of the DSCR. Now from the bank statement, when I hear bank statement, I'm thinking, okay, I have a job. I take advantage of my, I don't have a job. I have a side hustle. I have a couple of entrepreneurial things that I like to do. I generate income. I have a CPA. He's good. He makes sure I get my max deductions. So I'm not looking the best on paper for, a traditional mortgage, but you're telling me with a bank statement loan, I could qualify for a better house that's not necessarily looking at my after deduction income?
Yeah, 100%. I mean, most people that are self-employed, ultimately, when you run them on a bank statement calculation, they had no idea how much income they could use to even get the house they were looking for. They can actually get more house, or they start thinking about getting a second home. There's so much more that they can do. And frankly, you have more certainty looking at someone's bank statements real time, seeing their cash flow, than what you see on a tax return anyhow.
Once a year, that's delayed, yeah.
Ultimately, the rest of that loan is exactly what an LO is used to. If we're going to do the heavy lifting and calculate the income for you and give you the income you're going to use.
Logan does that for you?
We'll do that up front before you even have a property.
So as a mortgage broker, I could
an
lean
LO
on
can
mine.
now have a qualified borrower that they can work with an agent to go shopping around for their next house. And everything else on that loan is the same that they're used to dealing with. We're still looking at the same credit report. We're still looking at 60 days of seasoned assets. Same appraisal. Nobody's invented a non-QM appraisal, luckily, right? So everything else they're used to, we're taking the non-QM out of the deal up front, and they're getting more opportunity. And then once they're able to do that, they can build their network with an entire cavalcade of self-employed borrowers, CPAs, tax preparers. Everyone that's out there right now supporting and working with small business owners are their target market now to get more self-employed borrowers and do more loans. And as Aaron mentioned, that ALB is on average much higher than your traditional loan as it stands right now.
ALB asset.
Average loan balance for a non-QM asset is much higher.
Okay.
So why would you not chase after that and get those borrowers?
And it goes back to our first conversation when we're talking about, hey, you got to know what options you could take your client to. And this is in Miami specifically, people got multiple businesses, and you have bank statements. You could do multiple bank statements.
You can do multiple bank statements, and you can also stack multiple incomes together. So you could have someone who is 1099 on the co-borrower, but someone else wants to go P&L, on the borrower side, and maybe they do have a W-2 job as well. I always say stack. You can stack all your incomes together on a non-QM product
You're not doing
to
anything
maximize,
wrong. You're not doing
maximize that, and even leverage asset utilization if you need to. On top of that, to use assets as qualifying income without liquidating the asset.
So at the end of the day, it's about income. And the non-QM space gives the broker power to maximize the income of their borrower in different manners aside from the traditional conventional route.
That's right. And is Logan looking at just 12-month bank statements, 24-month bank statements? Like for the borrower tuning in, you know, the whole thing used to be you have to work for somebody for 2 years, 3 years, show stable income. What does it really look like for the first-time home buyer that is maybe going non-QM? They have the down payment, but maybe they really just got that business purring for the first time. Are they able to come at 12 months and really qualify?
So you're going to look at 12 or 24 months of bank statements for that self-employed borrower. We do like to see someone in self-employed for at least 2 years, but there are instances where someone may be self-employed less than 2 years, where you're going to consider that if it's in line with the line of work they're in self-employed.
Yeah, they just went off on their own for the first
time. I worked for a
time.
house painting company for 10 years, and now I own my own business, and I'm 18 months self-employed. And I have great credit, great assets, compensating factors. This is where you get to make deals work and be flexible. Then we'll consider that person as an exception for being less than 2 years self-employed.
And that's where non-QM lenders really come in, right? Is that flexibility. You don't have to fit in the box. Like Sammy said, I feel like we're at the non-QM conference here more so than anything because this is the hot topic, especially in Miami. This is a perfect place to talk about the non-QM borrower.
Here's some more stats for you. If you just look at 25, through November of last year, there was 5.1 million new business applications filed.
Wow.
That is almost at a COVID historic pace. And if you look month over month, it actually exceeded. It grew faster from October to November. So that trajectory tells us that there's going to be more and more self-employed borrowers as we go forward into 26 and the years beyond. That's 5 or 6 million new this last year, not to count everybody else out there that's currently self-employed. So that's why we continue to see and think that the overall wallet share, if you will, of the non-QM space is going to continue to expand.
That's exciting. I mean,
and so what is the plan for Logan Financial into 2026? Are you guys looking to double, increase the space? What is your capacity? What do you guys want to achieve in 2026?
Yeah, look, we've built a really scalable platform, and Logan's only about a 4-year-old company in terms of non-QM. We were actually founded in 1949. You don't see that much in the mortgage space. But we've grown at about $1 billion a year clip. So
that was with a B. Let me clarify for our listeners: billion with a B.
That's correct. And 26, we're forecasting another $1 billion to $1.5 billion of additional volume growth in the organization. Look, at Logan, we are really focused on quality. I really want to stress that. I hope all non-QM lenders are, because that's what keeps the space stable, as well as brokers. We're really focused on quality, but yeah, we think there's another $1 billion to $1.5 billion of market share that we'll grab in 26. Opportunities, endless.
It's exciting. I mean, I don't want to put you on the spot, but I'd love to learn. I mean, if you have a pulse on the market every day, getting an update on the market, where the things are going, what's something that excites you about 2026?
I think there's been a lot of pent-up demand, right? We've had affordability issues. There's the general view on rates has been that they're just too high. I think today you're almost seeing prime rates almost below 6 if they haven't dipped below 6. So you're starting to see some of the inventory build up. You're starting to see some of that demand come into the streets. Rates are coming down. You're seeing some pressure on home prices in different places. Affordability issues being kind of taken care of. You're also hearing the government talk about the housing issue, right? And you've heard recently that maybe there's going to be some restrictions on the big private equity companies buying homes. Some other things the government's looking to do, some quantitative easing, buying mortgage bonds. That is just jet fuel in the mortgage space, and there's so much pent-up demand. Look, I think there could be a real explosion over the next few years, and I think non-QM is positioned really well in that market.
No, I think I couldn't agree more, and I think especially with this administration and what they're doing to increase help with the affordability process, increase affordability for people to buy houses. Now's the time to get involved. And if you're a broker out there and you're hurting to get in business, it's on you. It's on you because they're out there, and Logan's hungry to take it. A lot of these lenders are hungry to take it. So do the step, do the work, reach out, go online, try to find them. And where is the best place to find and connect with an account executive at Logan?
So you can just go to our general website, loganfinance.com, and then we have our different segments of business built out there that you can, if you're a broker or you're a correspondent lender, even a commercial broker, someone who's not NMLS licensed that wants to originate in investment loans, can utilize our recently enhanced platform.
That's a big
there.
statement.
We have, we run across all major channels of TPO opportunity there. So just loganfinance.com would be where I would say to go.
And look, Paul will come out to your shop if you want. His group will come out. They'll wear your shirt if you want, and they'll go to realtor shops and they'll train.
So Paul's here for an invitation back to Miami. Is that what I'm hearing?
Yes. Hey, I'll come anytime. Maybe the weather will be better next time.
That was pretty nice.
We'll turn up the heat a little bit for you.
Aaron, what do you think is the most important thing that we did not talk about that we should talk about?
Look, I think it's important to choose your, we talked about the space in general and the opportunity, and I think that's really clear, I'm sure, through the rest of the podcast earlier today. I think as a broker, be really thoughtful in terms of who you utilize as a non-QM lender. We talked about the liquidity in the space, and liquidity is really good, right? But there's different executions of liquidity. There's securitization market, there is a big insurance bid out there right now, and there's balance sheet. And at Logan, we really focus on all three executions because at any given time in the market, one of those executions will back out. And that's what we used to see in the past when private money got soft in the space. So if securitization backs out a little bit, we know we have insurance and balance sheet and vice versa. So make sure you're with a sophisticated lender. We're owned by a very large private equity firm. We're on Wall Street all the time. We understand the market. We understand the different liquidity executions. We know how to train you. I think choosing that lender that will be there for you and make sure that you take care of that client, because that's what it's really about at the end of the day, is taking care of that client and you have execution certainty that that's going to get done. And you're not going to ruin that relationship because of some loan that you haven't done before.
And I think there's nothing's more frustrating for a broker to start a relationship with a wholesale lender, and then all of a sudden they say they have all this capacity, but they really start turning it down little by little. They start conditioning the loan more. It's not stable, so you go off selling based off your prior experience on your past loan, and the next process isn't the same, right? So.
Yep. That's right, and our real focus, to be candid, is that we want to be a constant source of liquidity and consistency for the brokers in the market.
That's great. Well, I appreciate you guys taking the time today. It was really good, very informative. We appreciate all the statistics that you guys are sharing with us today.
Oh, I got to get on the brief that Aaron gets every morning. I think the President of the United States gets that, and Aaron here from Logan Finance.
I'll send out invites. It's quite early in the morning, but you're all welcome. Yeah.
Thank you, gentlemen, for your time. I appreciate it.
Thank you.
Thank you for having us. We appreciate it.
Thank you, guys.
Thank you.